Good morning, everyone. This is Rose. It's Friday, April 28, 9 a.m. Eastern Time. Doing a quick audio check. Okay. Well, let's talk about yesterday's price action. It was a pretty much bull day all day, and every hour was basically buy the open, and it kept going higher and higher and higher and tested the last week's midpoint. So we talked about this area holding. Okay, so you could see that bulls didn't want to buy this high. It was just too high. Bears were seeing possible head and shoulders, and when the bulls don't buy and the markets start to come down, so we went up and we had a wedge here also. So we said that we're probably going to come down and test these lows, but there's a gap here, and we know that the bulls were pretty strong there, so chances are we're going to test this gap above March 22nd. But we talked about this is where bears getting trapped. So when you don't see a daily bar not closing, okay, testing but not closing a bear body above these highs, okay, or is right around those highs, you wonder if the next day actually bulls are going to trap the bears, and this was nothing but a break-even event. So you can see the bulls started to buy. Actually, here we had a bearish day. Okay, we had a bearish day. In fact, 2 days in a row, we had a bearish day. So we had a wedge. We had a really nice channel, but you can see the target from that channel. We ended up getting above that after hours, and we started very bullish yesterday. Okay, gap up. I said be careful here because it's kind of a trading range highs here. Let's see if they would sell, but I ended up going higher. We had a wedge here, double top. Bears try to sell and try to get a trend reversal, but they never were able to jump below the EMA, and we ended up getting this higher low, okay, and failure to sell. Bar 21 ended up being trap. And when you get, and this was basically the sign, and you're going to see this all the time, when you see something like this and it's no longer selling. This was the second leg, and then the third push, small wedge. And I said, I think I'm going to end up buying this because I don't want to sell it unless they really close a strong bear bar under the EMA. And they failed to do so. And I said, that's a really good, second entry long, even though a bunch of dojis going sideways, but we're trapping the bears here. So average price, I'm going to enter at the EMA. So I did enter and I went long, but I kept counting because bears also did 10-point scalp there. It was a good pullback, but ended up failing. So I started to count for 10, 15, take profit. Bears not able to, so I'm counting again from here. Bears not able to make no more than 5-point scalp. Can't go beyond 6. Okay, no consecutive is bear bars closing on their lows to get to the 10-point. Therefore, the 15-point initial swing will resume to 20-point. And when market got to the 20-point, I kept telling you guys really need to pay yourself here. It could go higher, but the 20-point is a good swing, and you do have to need to pay yourself. And you can see every other person in market or the machines, they did pay themselves. Therefore, we ended up going sideways. But what you see here is what we call a bull flat. It's a form of a bull flag. So the channel, the flag part is actually flat, and I'm looking for a bull bar. So I said to you, is if we start to close, okay, above this level with bull bars, I am looking to buy once again, okay? And there you have it. Really nice, strong bull bar, 39. You buy again. What are you looking for? At that time, I said, look for 30 point, right? So here's your 30 point, and no profit taken. It's actually blowing through it. So I said, look for 40 point. And I said, market doesn't need to stop here. It's probably going to go another 5 to 6 points to see if it can get another additional 10 points and 20 points, and brand new trend could get us to 80 point, right? So I'm counting again. So this time I'm counting to see if the bulls are closing above 6 point. Yep. So you do have bar 61 closing. This is good sign that the bulls want to keep pushing this. We have been gapping above the EMA for quite some time, right? So since bar 22, 42 is 62, right? So that's 40 points plus, and it's getting to be 50, not 40 points, sorry, 40 bars plus, so it's trying to get to 50 bars. When I see something like this, when bars are gapping above EMA more than 50 bars, okay, basically there's systematic buying by the machines, okay, smart money. They're going to ride us all the way to the end of the day. Now, sometimes you get a exhaustion and a dip, really quick sell that could close the market under the EMA, or you get this very lousy profit taking, and it's actually a flag on its own. So it looks like at the end of the day, it's going to do a quick test of the EMA, maybe test underneath the EMA, but it's not going to close below the EMA. It's going to want to close above the EMA. This is, by the way, Amazon news came out. So basically, it just dipped, grabbed those orders, limit orders, and then went back up and closed higher. So this is basically another flag. So I see a 6 point right here. So what am I looking for? I'm looking for a 10 point. 10 points is right there, but it can extend to 11 point. Okay, so I'm looking for 1175. Is there a bull bar close? Yeah, there's a bull bar close, and they're taking profit. I'm counting to see how much that profit taking is. So basically that's a 6 point, but they did not close that body below the 6. That was a 5 point scalp. Then it goes back up, but it cannot make a new high, I think. Hold on. No, it did make a new high. So count begins here. I'm raising my voice so I can wake you guys up. You guys need to look alive. It's Friday, but Fridays we get really good moves, although the good move was yesterday. So this is the new high with bar 71. Okay, so they're selling. Here's a 5 point scalp, but no 6 point close. Goes back up, does not make a new high. Okay, so it's selling. It's trying to get to the 10 point. 10 point can start to take profit as early as 9 point. Look at that. Did we get to the 9 point? No, I don't know. I have to zoom in. This is no coincidence. Okay. Coincidence. This right here, absolutely machines at work. Okay, so they come in, immediately grab it as they know that these bars are gonna take profit. Look, it's open. This bar opened right here, dipped, grabbed those orders, and went right back up. Now, if you're a bull and you actually parked your order right here and you scalp, hello, why is this not working? Interesting. This never ever happened before. My ruler stopped working. I think machines figured out that I figured them out. So now they're like, let's just throw a monkey wrench and see how she handles it. All right, so there we go. That never happened before. I was like, messing with my emotions here. I live with this ruler. If I lose this ruler, there's no way I'm trading. Anyway, so here we go. That's a 6 point. They're going above 9 point, 10 point. Hello, 15 point, but they're going to take profit. If a bar is exceeding and zipping through the 10 point, not taking profit, you need to pay yourself regardless. Have a runner, but try to take profit around 15. It might shoot up to 20. It starts at 19. They could not get to it, but they will take profit around 15. So I would not expect a 20 point unless it's a news event. It can go 40 points. But this is end of day. This is after hours, literally 5 minutes after the close. So if you're in this and you paid yourself a 10 point and you see that bar is still going, pay yourself around 14, 15, but get out so you don't have to scramble in this upper wick. So you can see profit taking began. And then they closed. Okay. So how would you trade this day? This is one way to do it. And I try to scientifically explain to you guys why it's moving this way. It doesn't matter if it's a bullish day, if it's a bearish day, even if there is a news, it's all counting. Math never fails you. Math is math, and it works on any day type. Does not matter. There is no exception because machines need to calculate. Okay, so think of yourself as the machine. You have to calculate and you have to make sense of something. This helps. So this way, I never go wrong. I mean, I do go wrong. That's, everybody goes wrong. I'm not a machine. But with this, I only know how much the market will move, whether it's going to move fast with news because there's a catalyst, or it's going to grind. It's going to go slowly, but it's definitely going to hit those levels. Or how would you trade? I combine that with price action, what I've learned. Okay, so gap up. And what is that lacking here? Bears never were able to close a bear bar underneath bar 1 low. But what did they do? They took out the bar 1 high and then came back down, try to test, failed again. So we have a second entry now. First entry, second entry, bulls are buying. Third entry, fourth entry, pull back, fifth entry. It's still going, okay? Or you can count it with the new high. First entry, second entry, okay? So it's new high, first entry, second entry, new high, first entry. Let me do that. First entry, second entry, third entry, that's a flag, okay? So it's going. We're not making any lows. So where do you buy? Buy the strong bull closes. Especially if you see this. This is like the biggest sign that the bears are not going to show up for at least an hour or two. And this is going to go, right? So bar 40, midday reversal, nothing happens. I said around bar 48, maybe we might test the EMA, and sometime around 48 to 50, we might swing. But look, swing did begin here, right here, 48, 49, 40, but we never pulled back. So maintaining a gap like that, that's a systematic buying. So you just have to trust, okay, these strong closes and expect bull flag after bull flag after bull flag. Okay, so you buy strong bull bars. Buy that one. Buy this one. If it's a second entry, that's even better. If you buy here, you enter. If it pulls back, buy again here. Or put a buy order underneath this bar. It didn't even have to dip there, so you didn't have to add. It just, or buy at the low of the bear bars, okay? Weak bear bars especially. Just buy the dips. Look, this one came in, both that. This one came in, both that. Or buy above it. Stop order. You do not need to enter with limit orders. Buy that one. Definitely buy this one. And this one's going. Buy that one. Buy that one. Gap is forming, so this is getting a little bit difficult. So just grab your ruler, measure from here all the way to where is price gapped up. It's probably telling you, hey, I'm gapping up because I'm about to reach Rose's level. So maybe I'm ready to take profit. You might want to pay yourself rather than buying every single bull bar you see. You pay yourself, leave a couple of contracts running. Another one, you see profit taken did not start counter trend. So bears lost again. Bulls are buying underneath the bear bars. Oh, that's a nice one. Buy that one, right? So it came closer to the EMA. Buy that one. And because you're getting closer to the average price, so you can buy it. Buy that one. Definitely buy that one. I can even buy that one, but I'm cognizant of how much the market moved, and are they getting ready? If I'm buying this, are they getting ready to take profit? Do I want to add here rather than paying myself? Think of that, right? So there's a bears try to sell here, so we know that profit taking can move the market to above bar 62. They try to sell it, they sold it, then they got disappointed with this bar, they sold it again at the high, broke even with this bar, or they didn't, but they're going to sell high, and they're going to try to get to that 62, okay? So if anybody who sold here, they couldn't even get out. So mark this area, because we're probably going to come back to this area. When? After hours or today, we might. But anybody who sold here would try to two legs, it utterly failed, and they're stuck. They're hurting. They might have sold here. They're selling here. They're thinking they're going to get out. Now they're hurting even more. Now they sold again. They were able to get out here. Now if they sold even higher, look, this bar came down and test that, because these bears still trying to exit out. So if they exited out, that's good for them. But when you see something like this, this is way too bullish, chances are we're going to continue. So we're at about 10 points below, okay, the close. All right, so we're just about here. We might briefly come down here, test it, and then we might go higher. I posted a couple of, let me see if I can post those charts here. Give me a second. So here are some samples. One of my favorite things to do, evenings or first thing in the morning when I have my first coffee, no one's bothering me, I have my big, large monitor in front of me. I don't like to trade on the phone. I like to see it on a monitor. Trading is a serious business. I can't do phone trading. And that's just me. Some people are really good at it. So what I do is I go in time, I clean up the charts. There's absolutely nothing on the chart, no lines, nothing, okay? Just the two EMAs and the price action. I go to data series. I load about 500 charts, okay? But all RTH. And I browse through, okay? So I look at the day that we just finished trading, and I try to find the exact same looking day or similar, okay, price action. We gapped up, we stayed above EMA, gapped up more than 50, I think it's like 57 bars. And then we had a pullback and then closed above the EMA. So I try to find something similar to that and then look at the next day, what it's going to do or it might do. So this day we get bullish days like this once a month. But this day is very rare. We might get it every quarter or every other quarter. It's a very rare day. I think it's okay to say, but 95% of the time is, although L might say 90% of the time. But I think, I would say 99% of the time that we're going to touch the EMA. We're going to test the EMA. There's Al says he never has seen in his lifetime that market, started to gap up at the open and never ever touched the EMA. Always kept that gap to EMA until the close. He has never seen. That's why he says we will test that EMA at least once. So if he hasn't seen that, then I'm going to go with what he says because he's a veteran of trading and he knows a lot more than I'll ever know. So, but you expect that. So what I do is I go back in time, sometimes 1,000 charts. I go back year before. I take screenshots of those charts. Encyclopedia is perfect for this. You can go in there. We have sections basically showing these charts, okay, and how to trade them, so you don't have to create your own database. But what I do in the morning, I spend about 15 minutes, half hour, study these charts, and I post a bunch, okay, is here in the trade room Discord that are similar, that may trade this way. We might actually we might gap down below the EMA, go back up to the high. When a day is this bullish, okay, remember what I said yesterday, okay, it's not very bullish. We end up going and testing the high. We might end up starting somewhere here underneath the EMA, okay? Maybe come down here, and then we can go back up. We might come down, and then finally we could actually start the climb and have another bull day. Or we are simply going to come down and stay in this trading range, and then we might even sell. Or we will simply, okay, come down, go up for a while, and then sometime midday we sell. So we would have a trading range day. A bullish day like this will always want to go into some kind of a trading range, okay? So we might form a trading range, and then Monday we might actually break out again, because bulls want to maintain their bullishness, okay? And they want to take out this April high, and then they want to get to the February, okay, second high. If we start to cross above February second high, this is the target. This is where, but eventually bulls are trying to get up to here, but that's too far away. We do have a measured move target, which is around 4,300. So that's actually a lot more ideal, I think. So we might end up going there. That would give us a wedge, a brand new wedge, 1, 2, and 3. And if we do that, then we might end up coming down, because bears are still looking for reasons to sell with trap. But as the bulls start to take out these highs, especially that high, that's when the bears are going to be exiting the market. They're going to decide bear channel or the bearishness is no more, and market is trying to go higher. We're not there yet. What if we just get a head and shoulders and failure to get above that right shoulder and make a lower high and start to sell? There's a head and shoulder here. I don't know if you guys see it. It's a smaller one, but it is there. So we might be making that right shoulder. So if we maybe go up and not able to get above this thing, or we go up a little bit. See, I wouldn't want to go up a little bit. I would definitely maybe a test of the high, and then the failure. I don't know. Next week could be another sideways and down, or we're just going to have this beautiful bull flag. The only problem with this bull flag is that it really hasn't set up yet, although this is looking like a bull flag, wants to go test that high, but it's also looking like a head and shoulders. However, there's a neckline. We go there, we come back, break that neckline, then we have a 1, 2, 3 wedge, then we go, then that would be a much better flag formation. So I'm not sure if we're going to get there. Bulls want to get to this measured move. Bears want to trap the bulls and want to come back down. Get rid of that. To these lows, they want to breach below the March 22nd high and is actually start selling. But right now we have a really strong bull day, so bulls probably are wanting to test the highs, get back to these highs. So how would that work on here, Globex? So we have a Globex range, very bullish day. We already dipped, okay? And can we dip? If we do dip, I'm going to look to buy here and here. But if we start to get above this level, then I'm going to expect bulls to actually get back to the Globex high, test this high, then maybe go sideways. I don't know. But if we get that high, we might actually dip and then go higher. All depends on what we do here. This is resistance. We are testing the Asia low, but you can see that we're only testing the Asia low and we're not closing any bull bars. We do have some news set up. Let me see. Yeah, so 9:45 Chicago PMI, and then the consumer sentiment at 10 o'clock. So those will play a role moving the bars either way. Bears want a triple top and a wedge bear flag above the moving average. Then they need to start to close bear bars, take out this low, take out that low, but any double bottom could start to swing once again. So I don't know what will happen here. Right now we're moving above these moving averages. This is 20 MA, this is VWAP. There's a tight trading range, therefore it's magnet, and the heart of that trading range is right here. So I would assume we're going to go there. If we do fail there, we have a sell zone up here because they did sell after hours in London session. London trapped. There was a bear flag right there. Ended up being a bear flag, 1, 2, 3. And they got a measured move to the downside. Okay. So if we get there, they're going to try to sell. We might sell a little bit, but this area could, if we go above, come back down, this area could become a support, and then we go again and fail to sell, then we get above and we keep going higher, we go up a little bit, and then towards the end of the day, maybe 2 o'clock, 1:30, we might start to come back inside this range once again. Okay, so we might be creating a one big range here, even though today can be bullish. Sometime, maybe, I'm guessing around 2 o'clock, we might end up coming back into this area one more time. So news will tell us what the market wants to do, but anytime you have a big bullish move like this, market always wants to get back up to the highs and it wants to test. Remember, in a micro level, you have this bull channel, right? You have the trend line. Bulls will fade any first breakout. That's the first break of the channel. There are always buyers there. They will want to buy and get back to the high. Either they will break that high, pull back, and they're going to keep going. Or they will test that high, and they're not going to be able to break above. They're going to have a double top, neckline, and the bears are going to try to break that neckline, and they can reverse the market. That's how you get the head and shoulders pattern. Okay, since we are bullish, we're probably going to go up there and test. So that's the same thing, basically, what's happening in a little larger, format. Now, what about sideways? Can we stay in sideways? Well, we can go up, maybe come down, go up again, and we might even sell and then close the day, maybe right around there. Then that would give us a double bottom, bull flag for Monday, for a dip buy and go higher. Okay, so I posted some samples. Take a look at those charts. The first one is, you have to flip the first one. It's the bear version of a strong bullish trend. So if you flip that, that will give you an idea what the next day would be like. Sometimes when I see something similar but bearish, I like to flip that chart. It's basically the same price action, it's just the other way around. Okay. All right. I am now waiting for a market to open. Less than 20 seconds left. These highs we're already testing. We're almost there. Probably sellers here. Okay, so we gap down. Expected, because there are probably sellers stuck here. We're inside the resistance. This is the ETA chart. This is where the bulls are trying to go and test. We might actually fail from there, so be careful. There are a bunch of earnings. Chevron and ExxonMobil came out today, earlier. ExxonMobil basically is, they just exceeded the expectations because one of the wells that they found is now producing a lot of oil. So it's been moving the market because of that. So we're trying to get here. You really want to pay yourself there. And we're going to be testing those highs soon. We tested last week's midpoint, last week's range, trading range midpoint, and then we came down a little bit after hours. We might be trying to get back up there. But average price is down here. What if we pull back? We might. So this is where you want to pay yourself. This is already 20 points. Let me check something. Nope. That's 20 points. See, did you see what I did there, Roy? I think that was you who asked. Although I'm not sure. But who asked me that question? That was not Roy. That was Stipe, I think. Yeah. So Stipe, if you're watching, did you see what I did there? I've been answering your question, by the way. I measured this. Why? I wanted to see this counter trend, how much the bears moved the market. They could not move 10 points, not even 9 points. So the bull trend is intact, right? So I have to count from this low. And that's a 20 point, and they're taking profit. Clockwork. Doesn't matter whether it's news or not news. Bulls know. They can take quick profit, they can still continue, but they have to close the bull bars in certain levels. Machines will respect these levels. It doesn't matter what the conditions are. Yes, if the counter trading side, say the current trend is bullish, but the counter bears able to make a 10 point, then you have to reset from the new pivot level. Because they did enough damage to weaken the prior trend. $41.52 or $52.25 is give or take. 9:45 is 10 minutes to Chicago PMI, and then the consumer sentiment is, yeah. So be careful. Bar 1 is a really nice bar, bounced, so bulls are trying to get continuation. Okay, so target met. Switch that. Open of the week is right there. And let's see if we can go higher and test the close of yesterday and close that gap. Market will probably want to test the prior high. Bulls need 2 bull bars to start a trend, one of them closing on its high. Better if it's both of them closing on their highs. Globex high is right around the corner. Market is trying to get to 41.55. But be careful, this is 20 point, and I said we're going to test the 41.52. We might come down from there. Because these 20 point bulls haven't really taken profit properly. If we do close above 52.75 or 53 with bull body, then we continue. But we're at a level. I think there's a little bit more room to the upside. I paid myself just in case that it collapses here. So here's an example. We might be wanting to test that high, come back down again, but then it fails. Double top, neckline, or triple top, lower high, neckline, bear flag, and sells all the way to the open, and then goes higher. So there's that. Market has an objective. It wants to get to the 4200s. Can they continue to buy? Well, they have to show us buy the close bars, reaching up to this level, and then furthermore up to April high. 4200 is above that. Here's another one. Go to high, it comes back down. About 2 hours, we go sideways. You get a climactic day, right? So it's looking for support to buy. It might have already found one. If it hasn't found one, it might still come back down, give us a double bottom, and then go higher. I don't know. Right now, 2 bars, they're trying to close this bar above the 21 point or 22, and then go higher to the 30 point, 40 point area. So you can see they found support and bull flag. You can call that a wedge if you like. But it just goes here 1, 2, 3, and it goes higher, bull flag, and it stays above the EMA all day. You just buy the strong bull closes, or even buy the pullback. You see there's a high 2 at the EMA, so therefore it is a bull flag again. It's a little bit of shallow one, but it does go and test a high, makes a new high, and then traps. There's 1, 2, and 3. Let me show that. 1, 2, and 3. So there's a wedge top, and then comes down, but cannot go beyond this low, so it closes right around the EMA. So we are bullish. What about bears? What if suddenly this news coming up turns things around? Although it doesn't look like this, but what if we get a bear bar? Suddenly we're in a trading range, something similar to that. Well, double top, double bottom, failed, double top. Now we're breaching, we're making new lows. You would look for a wedge and then reversal back and test that high, but it stayed sideways. But so far we have 2 bull bars. So therefore it's trend from the open, and we're at the EMA, and the bar 2 actually closed slightly above the EMA. And bar 3 open at the EMA, which is good for the bulls, but they need to close it above the EMA to become always in long. It has been always in long. It's just trying to become official again to get back above the EMA. So that means bulls really need to close that bar 3 with a bull body above the EMA. So if they fail, can we get a some kind of a head and shoulders here? Left shoulder, head, possible right shoulder, neckline. Oh, they're going to have to break this with such conviction. I don't know if that's the case, but we'll see. Bulls need to close above this level. We have not tested this area yet. And I warned you about that 41.52. You really needed to take profit. Okay, so if you didn't take profit at the 20 point, you really needed to take profit there. But this resistance now, can it be a support? Probably, because we closed the bull bar above it. Okay, so now I want to see bulls stop the bears here, keep some kind of a gap open, and then use this area as support, and then get back above the 41.52 and test the high and make a new high. And that's what I want. But they have to show me, right? There is a measured move. So we could go up there. Or you can take the whole range. That give you much bigger targets, okay? But I'm going to use this one. So what I'm trying to say is I wouldn't be so quick to sell it, but I am flat right now because less than a minute left for the news. And then 10 o'clock, another news comes up. This news can actually make us bullish, so we would get finally above this open of the week and the EMA, and then we would go up there. Then I'll buy, definitely. I'll buy small, and I'll add if I see more bull bars. Otherwise, I don't want to do anything right now before the news is announced. You can go the other way very quickly and don't want to be in that. Higher than the forecast. Came out higher than the forecast, the Chicago PMI. What does that mean for us? Nothing. We don't care what the news sentiment is. I mean, it's just, you know, I always like to know whether it's positive or negative, but it doesn't mean anything. What means is that what will happen here, okay, it's in front of you. Bulls trying to get a second leg up. Close of yesterday, they want to test it. Like I said, they're trying to get back above this 57.25. I'm going to get up high there, but be careful here. Second leg can trap if they fail to close above close of yesterday. Globex high is, we are there, but can we get above it? That's the question. We have a cup. We're probably going to come back to form a handle before we go higher. So be careful with that cup. There's no handle just yet. 57.25 is what they want to test, and they want to get above. 57.50. Really nice bar. It's a 3-bar breakout, therefore you can have your measured move target. But bar has to close above the close of yesterday. They're trying to close the gap here. That means bulls need to close that body aligning with the close, at the minimum close of bar 81. If they're able to do that, they would close the bear gap, and that would, you know, make them more bullish. So it is important to close that body above close of yesterday and align it with bar 81 close. Here we go. Or just one tick. That's micro. This is E-mini. That is the target they want to reach. It's a bit of a resistance here. Be careful, especially on the hourly. It's going to get a little bit difficult here. Look what's happening. That should not be happening. If bulls really want to close this gap, they have to close that body as high as possible, overlapping with bar 81 body. A good bar closed above the 20 point. I don't know if we're going to come back, but if we do come back, is the breakout point above bar 3. Okay, the high of bar 3. Their buyers probably waiting. Bulls want gaps, so there's a bit of a gap there. If they close this bar bullish, they may not actually come down and they say, hey, we have a gap here, so we're going to keep going higher. But the market order bulls already entered. So if they're buying that early, okay, at the open, is they're trying to go for ATR is 5. The breakout point 53. So it's around 58.75. The minimum, like 59. They're trying to reach 41.59 at the minimum. Could go higher. 49.59. 49. 68.69 is where they're trying to go. Probably. Doing a quick math there. But be careful. Bulls need to close this body, filling that upper wick of bar 4. They will scalp here because they're disappointed bar 4 did not close properly this gap. It also did not close above close of yesterday. So this might collapse and come right back down to the breakout point of bar 3 high, looking for more buyers. Because anybody who bought here and the price goes up, suddenly comes down, they're gonna be disappointed. Where are they gonna buy? At the breakout point to break even. So bulls are trying to continue the momentum, but momentum, you would notice the momentum, bullish momentum, if you see bar 5 body closing at the high of bar 4 wick. If it fails, then the momentum is dying, and we can suddenly pull back to the bar 3 high. There were sellers there. They sold. They're disappointed. So what are they going to do? A couple of points above, they're going to sell. They're going to try to break even. So bulls are trying to get their momentum and keep going higher. So I'm watching this bar. And they want to close above 41.57.50 to become a lot more bullish. We are using this area as support, as you can see. That's the measured move target, or measured move target from here. But this would scare me. So bulls are trying. They're trying to compensate the failure of bar 4, not able to close the gap properly. And if they fail here and they cannot compensate, this is going to come down to the high of 3 very quickly. And then we're going to look for limit order buyers there. If they close it, then that's good. They will continue to go higher. We've got half a minute left to close that bar as high as possible. And if they do, market will try to reach the high of yesterday and try to get up there. This is their target. But again, there's the 10 o'clock news in 5 minutes. You now have outside, inside, 4 and 5. Bulls are trying to close above the bar 4 high and get breakout. So their breakout targets here, here, and then the measured move target for the bar 4 range here. Bears want to get a double top, sell, get back to the midpoint of bar 4, close a bear bar, and then continue to come down and test the bar 4 low. But if this bar closes bullish, it could continue to go higher. But there are sellers waiting above because there were sellers here failed and they do not see any bear bar to sell. They're looking to sell a certain amount of points probably because they're stuck. Here's a 4 point. Okay, here is 5 point. They may sell 5 point above, 10 point above. We took out the bar 4 high, but they need a bull bar. That is a bull trend from the open, so it's good for the bulls. They're trying to get to their measured move target. We reached the first threshold, and this is important because they need to close above it. The moment we close above it, we will go higher. But if we fail, there are sellers here. Want to bring the market at least down to the high of 3 because there are bears stuck there. So no one's going to sell if they don't see a sell signal bar or a bear bar. Only machines will enter with limit orders. I know I wouldn't. I would wait for the bear bar. If I'm stuck. Since I'm not stuck, I'm not interested. So. News coming up in 2 minutes. Consumer sentiment. We're gapped up, so we might actually pull back. But I'm not so sure because anything can happen with news. A little bit more room to the upside. 4160. I like to see tested at the minimum. Or the high of is this right here. That's news. So we're coming down to see if we can actually test, or we're going to keep this gap open for bulls for another leg up. That's it. We just tested. See how immediately they saw a double top. They sold a close of 6. Some entered underneath 6, and look, it just went 1 tick below that high. So the news helped these bears, but is this all they're going to get? And they're going to exit out? We'll know when the bar closes. If it closes like that or bullish, then that's it. This was nothing but a break-even event. Somewhere around between 2 point to 5 point, and I measured it was just about 3 points. They sold it. They sold it at the 2 point, and they sold more. Those are the machines. Others will jump in with, because if you measure stock, you sell the close of 6. That's your break even. If the bar closes bullish, I think I might be behind, by the way. I think I'm behind, aren't I? Am I behind? No, wait, 41.53. Yeah, I might be behind. 54. I'm not so sure. 55, 25. No, I'm good. I think I just caught up. I think I should be okay, right? Because I'm looking at Thinkorswim. I have the same price at the moment. Okay, good. I noticed that the MES was fine, micro was fine, but the ES, the E-mini was falling behind for some reason. All right, here we go. That's it. That was the break even. Here we come, measured move. But bulls really need to get above that 57.50. When they reach that, that was a nice support. Bar 3 showing you that's becoming a support. And then a bull bar. You can buy. Okay, you can buy the pullback. And you enter there. And exit there. Or scalp there at least. So I want to scalp. And see if we can get that 41.59. It's probably going to go higher. If this bar closes like that, that's a beautiful buy signal bar right from the EMA. Okay, there will be more buyers. But I scalped anyway, so as it gets closer to 59.75. Okay, so that measured move, it's not 100% met, but to me that's success. Now look at that gap between the 4 and the 5 on your chart, Roy. So I'm not sure what that is. 61.50 is next, but just be careful, it could come down a little bit before continue to go higher. Okay, we met that target too, 61.50, and here comes the measured move target on the RTH. Excellent. This time maybe we can finally close above this magnet, which is April 4 high. High of yesterday's magnet, but here's my bull target. This is where I want to see bulls actually get us there. But it's getting a little bit is topping. They're going to be profit takers here. We do have a wedge up on this, down on this, up on this, down on this, and up on this. So we have a wedge double top. So be careful there. It's also a diamond pattern. Diamond patterns can be, okay, goes up, comes down, okay, and then goes up again. Suddenly it could reverse or it could break out. So we're getting to that level, diamond, okay. It could be suddenly doing this, don't be surprised, but I think it wants to close above high of yesterday and get to my target, which is right there. So you should have a runner running into here. You can also measure that would be your measured move. But it's right around the vicinity, so you don't really need all of these. Doing pretty good over here. Always in long. Continues. Bull trend continues from yesterday. But you're at the high. So just be a little bit careful here. If you see the bull bar closing above bar 79 high, then we're going to continue to go to my target. We're so close to it. 71.75 or 71.50. Big bar, big risk. Okay, so biggest bar is in this trend. It is, maybe it has a new measured move. So that will be the target, which it could drift, but a very big bar. Probably going to get continuation, but maybe a couple more bar drifting, but it will come down. Way too big. It's a gift, okay? Market is giving you a gift here. That means you have to pay yourself. Don't be upset if it doesn't come down, but to me, that's a gift. We have come so close to it. Right, so I said we will test that. We're so close to it. But if you measure from here, we might continue to go higher, but this is where I would pay myself. It could go another 10 points, but it will take profit first. It will come down. And then if it wants to go higher, that's fine. But this is where that pullback might be happening. So hopefully you stayed in that runner. Am I behind again? Hold on. It says 70.75. No, I'm not. 70.50, 70.50. No, I'm not behind. I should be okay. Maybe there's a 1 second delay, but that's normal. That's the, I mean, I'm not sitting next to you, so that's the application delay maybe. We used to have that on Zoom, like maybe 1 second delay. But thank you. Do let me know all, because I do fall behind when there's volatility like this in the market, time to time. It helps me because I'm in a trade too, so. All right, they're still pushing towards, that's that drift. It's pretty parabolic trend from the open, so expect a pullback, but probably there will be buyers very tight channel, so there will be buyers wanting to buy the pullback. There's a gap here, bulls maintain. There's another gap here, bulls maintain. We will probably going to come down a little bit, but if we keep that gap, we could keep going higher. That's that. That's why I say you need to pay yourself. I don't care if it breaches above. That's none of your concern. This level that I'm putting is your concern, because that's a 2-point area. You could go a little bit higher, but it will start to take profit. That is market's gift to you. Now, if they close above 72.50, or maybe even 73, they could go another 10 points, 20 points. But this is where, you know, you just have to learn to be happy. Lack of a better word. It's Friday. Nobody wants to give back what they made all week long, right? So there's no better feeling than paying yourself and then figuring out if you want to enter again later. But look at the direction. It's been so far 3 bars, 7, 8, 9, with the news at 10 o'clock. Bulls are strong, but we're at the highs. There's possibly a wedge here, okay? So we might come down, I don't know. There's no bear bar. There's nothing to sell. So if you're still holding, you might be holding a runner. So you're hoping a bull close above bar 9 high to continue to get to the measured move target. Well, right now we're pretty bullish. We're taking out the highs. So a bull day like this, it's going to go sideways. Expect the trading range to form and price to go sideways for at least an hour or two. So maybe we will get the last one, AM 1986, that you posted. I will wait for bars to close above 72.50. And then I would look for, so basically what I'm looking for, you can stay in this. You're looking for market to give you minimum 5 points, okay? If they cannot do that, and instead start to print bear bars the opposite side to the downside, 5 points, then we're not going to get there. We might, but if bears print that 5 point, they might want to get 6 and a 10 point. You don't know. But right now, bulls are trying to close bull bars. They're trying to get the 5 point. And if they make a 6 point, then they get to the 10 point, and then the 15 point, and a furthermore, even 20 point. But first, I'm looking for, say, 6 point. You should be in a runner. You just paid yourself here. You didn't go flat, okay? So direction is to the upside. You got 3 bull bars, big gap, but we will come back to this area eventually. And we might actually buy the pullback because we have gapped up from the EMA so much. So bulls want to continue, and they want to get a new trend that could last 20 or 40 points to the April high. But we don't know that. We're so close, we're probably going to get there. It's just that they need to show me. This is still an area here. I'll just put in air. So that's 250, 75, 0.25, 73.25. So I want to see a bull bar closing above is 73.25. So I want to see a bull bar. If they do that, they're going to get here, they're going to scalp, close a bull bar, they're going to continue to go higher. Well, there's you can buy above these bars. You don't need to count. Look, 3 bull bars, second bar, 10 minutes into news, strong bull bar. That's the gift. I said it's going to continue to go higher. You could have just bought, you could have just paid yourself a little bit and left the runner. This is your runner. Or if you're flat, you did nothing, and you could just wait and see if there's any bull bar closing and no bear bars. Buy the close, just keep going higher. But you still have to scalp somewhere here because that's measured move. And we still haven't, I measure because I want to see these are criteria to go to get continuation or get reversal. So if I see a bull bar closing, bulls are probably going to push higher. But you see bull bars, first of all, you needed to enter right here, right there. So if you didn't enter there and you're trying to enter this high with a such gap to the EMA, it's a bit of difficult, right? So it could reverse. But really nice close. Look at bar 10. So they're probably going to buy that close. And they're going to expect this area to be tested. So the bulls are basically, what all they're doing is they're chasing this. Since they got the really nice bull close with bar 10 and entered at the close or one tick above, is they're looking for 4.5 points or 4 points and 3/4. Okay, so let's see if we can get that. If the ATR doesn't change, that's where they're trying to go. But for me, it's too high. I rather have, I rather see a pullback. So I didn't buy this. I actually scalped. When I see too much of a gap here. But anybody who bought here, if they get disappointed, they're going to buy. Again, maybe underneath 10. And then they're going to try to get a break even or continuation. So if you buy above 10, that's fine. You're buying it, but you're buying also very close to a measured move target. This has to take profits, okay? It did not take profit. You're at a 40 point. Okay. If you measure from here, it's not 40 point. It's about 30 points. So these guys need to pay themselves before they continue to get to the 40 point. But if you're measuring from ETH chart, you're at a 40 point. That's a major trend target with a huge gap up. Why would you want to enter there? That's why I said this is a gift. It's going to drift, but they will take profit. Yes, they closed, but the profit taken, there's no profit taken bar. So it has to at least print a 1 bear bar. And that's it. They're taking profit there. But if this bar now closes above 73.25, then we will get continuation. Now ATR is 550. So this can go 550. Other bulls who want to start a brand new trend is they want to see if they can close a bull bar here so they can get to the 10 point. Measure from there. So looks like this is where the market is trying to go. Somewhere in this area. But that pullback has to be weak, and it should be one single bar, and the bulls should continue. And it's better if they can actually close that bear body above 73.25. So anybody who bought above 10 is disappointed because they don't know how to count. They see a bar 11, oh, exit. And then bar 11 closes high, and they jump in again. That creates more bullish pressure to the upsides, okay? So those are the new traders. They are in and out of the trades because they don't know how to read the chart. You got 1, 2, 3, 4 consecutive bull bars. They got to take profit somewhere. So I'm measuring for you to show you that. If you're buying into that profit taking, you're going to be scared with that early bear bar. Eventually it was. But if you are a smart bull, you're still scared, and you bought here, or you bought here, and this bar was bearish, you put a buy order, okay, maybe underneath 10, or the breakout point right around here, and you wait to get filled. If it doesn't fill you and turns bullish, you didn't add to your risk. You're good. You can cancel that out. But if it were to come down, it's most likely they would have filled you and give you a break even. But you didn't even have to. It went above, went back to your original price. So anybody who entered above 10 for being patient, actually making money. All right, measured move met. We don't have a 6-point yet, but that's probably a 5-point. I don't know. Nope, 5-point is right there. 525. Yep. So the bulls got another 525. That's great news. But if they want to continue, this is where they need to close a bull bar, preferably above. For ATR traders, scalpers, that was 525, so now it's 475. This is where they're trying to reach. So I did say it's somewhere in that vicinity. You see how it just came, it just went right to the 6-point? What is going on here? It's I think I might be falling behind again. 76.25. Nope, I'm not. So this is all good. That was bizarre, huh? Why do you think that happened? Somebody sold there, disappointed because they saw a bear bar. They sold higher. They might be exiting out because their sell order may not have made money. But can the market go is higher? This is that 5-point bulls scalping also, okay? This is that body. Remember, I just measured. They're paying themselves. But the moment after they pay themselves, they're still in there with a runner. They want market to go additional 10 points above this 40-point. So they want to see a bull body closing. If that bull body closes, then we're going to go even higher. Okay? So 475.5, just about here. I'm not saying anything new. I'm saying exactly the same thing. I'm keep repeating it. I'm trying to stay with the trend, but I see that those bulls immediately pay themselves at the 525, and it just went to 6. That's great, but they're not. Nobody knows if this bar is going to actually close above it. But if it does, market is giving you that condition. It's your job to measure it. You measure it and you see that bull body closing, that means we're going to get to that 10-point. Additional 10-point to start a brand new trend to the upside. If they fail, bears can actually start the count. Okay, 5-point, maybe first 2-point scalp, 4-point scalp, 5-point scalp. So they would want to bring the market down to here. But if they want a 10-point, they need to close a bear bar below that. If they do that, then expect a 10-point, possibly, I don't know. Sometimes all they do is 6-point and body doesn't close and it just reverses back up. Old trend resumes. I don't even have a bear bar. So I have to be patient. There is still 1 minute and 50 seconds for this bar to close. Bulls can continue to go higher. But the bars are getting smaller since bar 8, okay, and we're getting wicks. So if the bears get a strong bear signal bar, they can start to bring market down for 10 points. So be careful there. That's why that 6-point mark is very important. And by the way, we met my target right there, 78. I don't care about this anymore. That was pretty accurate. That should be 25 quarter. If we get above it, we'll continue to go higher. I've got more targets. 4,200. $41.88 area is where market is trying to go. 90.88. April high. But bars are getting smaller. and we're gapping up. Good spike in channel. 12 didn't close a 6-point. Smaller body, so momentum might be getting lost here, slowing down. Failure to close that 6-point. We might actually pull back finally. Now it's getting, you see how they failed? I still don't know where this is going to close, but now it's making bulls, nervous. So here's a spike, quick pullback. So we might actually test this area. There might be buyers here, and use this area as support and go back up again. But it's not an outside down bar, so it's high. It's not higher than the bar 12 high, but it's trying to close as strong as possible. Where you have a spike pullback channel, and the problem with this pullback is that it's spike all the way to here, and this is the pullback. So you might actually test this area and then go back up again. Careful there. Okay, so what do the bears want? You don't need me to do this anymore. They want a 6-point closed, okay, or more, and they want to sell because they scalped 5-point. They just want continuation. And if they get that bear body closing beyond 6, that's their continuation into 10-point. Okay, so it could be profit taking could start at 9 or 10. It could even go all the way to 11. I'm just getting you the average price, 10-point. So I warned you about the spike pullback. Pullback is bar 11 lower. Okay, so what would you do there, right? So I saw first try and they failed again. If you did sell, what would you do? You need to pay yourself somewhere around bar 11 low. That's the pullback, but there are limit buyers waiting. Now, if the bears close that body where I mark 6, and then they can come down further. Anybody who's selling underneath 12 looking for a 2-point scalp, okay, that's it, they got it, but the body is still up there. But now they want 4-point scalp average, but eventually they want actually 525. 525 is exactly where the 9-point is. So can they get there? That's the question. They already got a 2-point, 225. It has to go to 225 to give you 2 points if you sold underneath 12, which is not a good sell signal bar. It's a bull bar. So that is why this bar is struggling to sell more than 2 points. But 2 points is initial. Why it's not a 1-point but 2-point? Why didn't I go for 1 point? I gave you an example yesterday. Why? Look at ATR. Conditions saying, listen, don't fall for just for 1 point. ATR is more than 5. Half the ATR is 250. Okay, so it's average 225. If the market half the ATR it gives you as a scalp, then go for a 2-point. Don't just settle for 1 point. That's how I know these bears can get that. So if you were to drop a sell stop order underneath 12, market gave you more than 2 points to scalp. Okay. Well, right now it's still pulling back. If we get a bull bar, then the bulls are going to continue. But if we get another bear close, you do not buy because it has a potential of pulling all the way down here. They're fading the first bear bar they see. Machines are fading the first bear bar they see. Why? Because it's a tight bull channel. You never sell. If you do sell, it's a scalp, not a swing. Because the first break, first bear bar, bulls already proved that they pushed that body above its midpoint. They're telling you they are fading. But if momentum is there, that means if bears close another bear bar, especially below 6, you have to give them 2 legs at least, 2-legged move to come down somewhere here before you even look to buy. It's all about timing and reading the bars and what's going on there. So to me, buyers are with limit orders. You got a big breakout follow through, actually breakout, follow through, follow through, follow through. So I'm going to mark this area. Okay, so this whole area. I'm going to wait for bears to bring the market down there. Okay, so see if I can actually buy there. This is a buy zone right here. This is where I would look. As if that bar closes, don't buy. Is let the bears try to get their reward. Then you can put buy stop limit orders here and see if we can go bounce. Probably they're there waiting. That's a 10 point and they exceeded. It should bounce a little bit. They should take profit because they've done a terrific job. But it's too big. The bar is way too big. But it's still going to bounce because they're exceeding that. It should bounce a little bit at least. See, this is why I would not have bought. Even there is, okay, so what can I do? I'm not a machine. If those machines bought here with limit order, they see this, what are they going to do? They're going to buy lower. Where's the key price? EMA. And as it goes higher, they will actually, if they bought here, they're going to get a break even. This is a big bar. It's too big too fast suddenly. I don't know why. It could be that 2 legs. I mean, it's just reversing. You're going to get these surprises. That's why they're called surprise bars. But it's bouncing. So let's do the math. If you're a bull and you bought right there, smack in the middle, you bought again, where's your break even? Is right there. Right? So say you bought, I'm just trying to get the 50%, right? Big bar. So I said I would wait until price to come down to the 10 point, and I would wait for these bears to start taking profit. They're not taking profit yet. And they actually broke this level. So now I'm not so sure, I'm not ready to buy. So I didn't do anything. It was just too fast. It came down. It didn't give me any buy signal bar. I have to get that buy signal bar. So they broke that. That was a very weak support. But look, anybody who bought here or in that green zone, they bought again here at the key price level, and they're breaking even. They're even making money right now. I did say it's going to bounce because it's the 10 point. It just overreached the 10 point. ATR became so fast. It was around 475.5, remember? Or 525. Suddenly it's 7 something. Look, they're making money. They're making money. Even those who actually bought in that green zone are making money. So there you have it. Market will fix it, but you just have to know what to do. Am I behind? I am behind. Hold on. Okay, so they still broke even, which is fine. Hold on. ATR just goes like literally 2 point up, and then I fall behind. But I'm only behind on the E-mini. I'm not behind on the micro. Go figure. Because I'm looking at the Thinkorswim, 66.75, 66.50, 67. Yep. So it's all fine and good here. This is the chart falling behind. But I think it just caught up now. Oh, no, it's not. It's still behind. Oh, no, it's not. It's still behind. I do not know why it does that on this chart, especially. Oh, I think I might know. Wait. I'm not sure how many days I'm loading. But anyway, so I think you understood, right? What I was saying there is if you actually bought in that zone, thinking that's a good buy zone, those people will buy, traders will buy at the key level a little bit lower. They're going to break even, and then they're going to make money with the original price. So I think this is the chart causing the problem. Just give it a second. This is the chart causing the problem. Just give it a second. Something weird happened. Oh yeah, okay. So, not sure why this is happening. Just give me a second. Something weird happened. Oh yeah, okay. So, not sure why this is happening. Just give me a second. Okay, it's coming back to normal. I say that and I can't even move the chart. Oh, okay. 18 days. Maybe that's the problem. Maybe that's the problem. Come on. There's a lagging. I might need to restart the application. But let me see if I can fix it first. How many times do you change those diapers, Stipe? You were just changing. How many kids do you have? Or what is wrong with your kid? I'm just kidding. I used to be a babysitter. When I first came to this country, an au pair, back in 1997. I used to also take care of neighbors' kids. They would pay me because the kids that I was taking care of, they would be in school and I had nothing else to do. Somebody said, "Oh, you can watch Jerry." What is Jerry? I thought maybe it was some kind of a sitcom show, that I can learn English. I watched the one episode of Jerry. I forgot what's his, that talk show. You know what I'm talking about? I'm like, no. I rather work. So I started taking care of other people's kids. There were triplets, babies. Oh my goodness. Talk about changing diapers. I had a whole system down, and I would get them down, 3 of them, and I would just change like lightning fast. Even the mother, actually, she was like, "How do you do that?" Well, it's all about getting the routine down. But that's kind of ruined having kids for me. So I totally understand the frequency of diaper changes type. But anyway, so here is a pullback from the EMA. This is still always in long, but bears kind of surprise the bulls here. They got their 10 point, but if that's all they're going to get, we could still continue to go higher. This is now a pullback, but I did say this is kind of becoming parabolic, so expect a pullback. That is your pullback. Limit order machines entered at the EMA. Now, they might try to get another leg down. This is leg 1, pullback, leg 2. So I have to allow bears to try to sell this with a second leg and see if we can trap them at the EMA one more time. Am I behind? Let me check. It's 68, 69, 50. Nope, it's all good now. Oh, he did? He passed away? Yeah, it was an old show. It was definitely not my kind of show. No way. I didn't even understand what was happening in that show. Like, this is so different culture. It was like so many emotions all at the same time. It was just stress altogether. So anybody bought with a limit order in that zone is, making money also. But can the bulls bring us back up to the 12 high? Is, they're going to have to close above it. The only problem here is that I'm no longer interested in these levels because bears made enough damage and moved the market in the counter direction 10 points. Okay, so they might want to move the market another 10 points if the bulls, no, they can't because now bulls are making 10 point. So we're going sideways. Could this become a trading range? We made a new high, but we're going sideways, so both sides are making money at the moment, but this is still always in long. I would assume the bulls are going to want to get back above the 12 high. So we're at the 10 points. They will probably going to take profit here. You have an outside inside, 14, 15. So the bulls want to test the bar 14 high, but there are sellers waiting there. Two bear bars, limit order bears are sitting above bar 14. They're going to try to stop the bulls in their tracks. Bulls want to continue into the 15-point area or 14 average, but there are probably limit order sellers waiting here. That means these bulls know, and they're going to probably take profit there. So if you actually put a limit order is in that 10-point area, even though it breached and went to the 15-point and it bounced, you'd be making money. So you would be in long somewhere here, but you need to pay yourself somewhere here because it's now trying to get to the 15 points swing zone. But that was the bear spike. Pullback, it just breached the pullback area pretty strong. Went all the way to the EMA. I would assume, remember what I said about that diamond? You're either going to get a reversal, okay, or you're going to get continuation. We're getting continuation. Since we didn't close bear bars strong enough, we're not selling. Since we closed bull bars, we're buying. So you have a measured move. We're stalling here because they're taking profit as expected, but if we start to get more bull bars closing above 78.25, we could go higher. And in fact, we might actually get that wedge. 1 pullback, 2 pullback, 3, and then we might actually start to come down sometime around maybe 11:30, or we're going to go sideways. But so far it's bullish, and it's trying to get to new highs. Can we make a double top and then come down? Just too bullish, but this leg did not get a second leg down. So there will be some bears wanting to sell. Either is here, and a bar like this, I would not have bought above it because you get a small trading range and you know it's already a 15-point zone. You got to let them take profit. Machines know that. And the bears machines also, they're looking for a second leg start, so they might actually sell bar 16 or above. Now, if we start to close above 12 and making new highs, then that's fine. You can go long, but it's just there's a small trading range, and this leg did not have a second leg down. So that makes me nervous buying here. But it is still always in long. And if you were to buy, you needed to enter. If you didn't enter with a limit order at the EMA, you needed to enter above 15 high. Well, we're definitely trying to go higher. It's just that there's a trading range, and we have been going high and high and high. Market needs to go into some kind of a trading range. But you see this deep pullback? That pullback creates a already signaling you trading range. We might be already going into a trading range. Okay, so it's marking the trading range, but this also needs a second leg. Sometimes you get these very deep pullbacks and they fail to make a new high. See how bears started to sell? Because they already know this is a trading range high. Anybody who buys above 16 are going to get trapped. So you got to give bears a chance to sell this. We might actually come down a little bit. Now, how can you be sure? Well, bulls took profit. Now bears are trying to sell. Okay, so they scalped the 5 point. They need to close below 6 and they can sell into 10 and make that second leg down. What if this becomes a major trend reversal? It can. Look, it's been making, let's see, right, 1 pullback, 2 pullback, 3 wedge, and a double top. This can become a major trend reversal very quickly. It's trying to get to the 10 point now, which is right there. That's the second leg. This is why I didn't buy above 16. If you were to buy with a limit order at the, is either the 15 point, 10 point, or above 15, you still have to scalp here. It's not guaranteed it's going to break out and give you this, because you have a deep pullback. Now market goes, it's not going to go up and up and up and up and up and up and up like this forever. It has to go into trading range. So you look for that deep pullback. There's one right there. And it's a second leg. That is the second leg right there. So it's trying to get a 15 point. Why do I need a second leg? Well, look how strong this leg is. So, and it's testing the EMA. Generally, you need a second. Market moves in twos, right? Bulls move in twos, sometimes 3. 3 gives you a wedge. Also, sign of an exhaustion. The market needs to try something twice before failing. And if it doesn't fail, that means the second leg can become a breakout. So there's a trading range now. So we are forming a trading range. I'm going to take a quick break and I'll be right back. I just need to grab some coffee, water, and I'll be right back. Okay, you can see that you have a strong bear bar close below the EMA. They're now coming down below this level, and you have a bar gap down. That's a major trend reversal, or at least they're trying to put one in there. Or it's going to be a deep trading range, and like I said, there are probably buyers somewhere here. Let's see, we are forming some kind of a trading range here, but we could find ourselves right at the open of the day very quickly. And earliest support is leg 1, pullback leg 2. So there's a breakout, pullback somewhere here. So we might come in here and look for buyers first before bouncing. But I also want to know, how much did we move the market already? We moved the market 25. They need to, since 20 there, they need to close the body somewhere here to get to the 30 and 40 point down below. Okay, so they already moved more than 20 points. They're trying to close the body as low as possible to continue to sell. We might actually pull back to the EMA and then sell from there instead. But we do have a trading range now, pretty large. So I'm going to wait this bar to close. If they close, there are already sellers underneath bar 18. Is double top neckline. We need to pull back. So we need to put a bear flag now if you want to sell. Once the neckline is broken, expect a pullback. But there are sellers underneath 18. They made money. So, but at this point, I would just be careful. I think bears are going to look for pullback, and then they want to sell it, because selling into support this late is not ideal. They are not entering with a good price, so they rather wait for a pullback and sell that instead. So I warned you about this possible major trend reversal. You needed to take profit there. Profit taking began, and then it accelerated. So anyone who sold here is now made money. Anyone who sold here haven't made money. Anyone who sold here made money. So this could go sideways and up a little bit, or it's just going to be a 1 bar, and then the sellers are probably here in this area. So we might keep going until we hit limit order sells. Somewhere between here and the EMA. Just trying to take that wick, the high of that bar. So it's, yeah. Because it gapped down below the EMA and separated from the EMA, if we don't touch the EMA, and with this bar closes somewhere here, bears could sell the close of that bull bar. But I don't know yet. See, this is why I did not want to. I came in late, so I missed this move. I would have sold underneath 18, but I would have been quick to take profit. And if anybody has not exited out, they're going to sell somewhere here to break even. So they're going to hope that market comes back in here. Now I want to see if there are any sellers at the EMA. So the trading range is trying to get to the 50% to its midpoint to see if there are sellers there. This is a day the market, both sides are making money and moving market 10 points average. Because if you measure this, this is about 10 points or maybe even more. I think it's almost 13 points. Yeah. So the bulls are trying to reach 13, 14 area. All right, so we pull back to the EMA. Let's see if there are any sellers here or the 50% of this trading range. Probably there are there. Yeah, so they are trying because people are disappointed under 18. They want to get their break even. Now, can we come back down with another leg and make a wedge? Sure, we could do that. So it's a strong bar though. This 20 suddenly we're reversing, but it's expected because we do have a trading range now. Since this is now is limit order markets, okay, you can see that anybody who's buying where the bears are taking profit, they're going to scalp. Okay. Can the market turn always in long once again? I need to see bull bars above 20 EMA. I don't know if this is a major trend reversal because it has to start to sell quickly with a bear flag. Bar 20 is too big. So if we start to close above EMA and we do not make that bear flag, then this is nothing but a trading range. We're just going to go back up again. And there are probably going to be sellers somewhere here at the highs. So if you measure, bulls are actually testing average 14 point at the moment. And they're trying to turn this into always and long again, but they're going to have to start closing strong bull bars and get back up to the trading range high. And there are sellers probably waiting there. If you buy above this bar, 20, okay, you're buying into a bear gap. Now, there was a bear gap here, bulls closed it. They could try to close once again. What I would do if I buy above 20, or if you bought above 20, I didn't buy, you have to be quick to take profit. You have to quick to be, scalping a couple of points and then leave a runner to see if it gets back up to here. They already bought and quickly scalped at the 14-point Titan. So I didn't buy. And the reason why I didn't buy, because I don't like to buy into right at the EMA, and the bar didn't close above it. And I don't like to buy into bear gaps. And plus, there's not much of a space there. If I were to buy, this is where I would have bought it, and that's where I'd be scalping, because there's a double top neckline. Bears are still looking for a major trend reversal on possible head and shoulders, left head and right shoulder. So this could suddenly sell. This is why I don't want to buy and didn't buy above 20. I would want a confirmation. I would want another bull bar. It's confusing now. Market goes up and then comes down sideways, kind of a trading range. It doesn't know what to do. Bears want continuation. Failed right here, but they could get their continuation. They just they might need to wait a little bit. How far bulls need to go for bears to enter? There's a resistance right here. Bear bar goes up, so goes above it and then sells. So this area is a resistance. If we do pull back there, it happens to be the top of the trading range, probably sellers waiting there. Okay, so I don't see continuation, but a weak bear bar, 21, but no bull bars closing above EMA. So we're not still always in long. Bears are trying to actually have always in short, but they have to really accelerate the selling, and this doesn't look that good. So I'm not going to sell this either, because bulls might still move this up to here, and this is where I would prefer to sell. Anybody who bought is above 20 trying to buy with a pullback. If you actually measure this, okay, pull back to the 33%, and they're trying to go long. But if we cannot make a new high, that could suddenly come down to the 50%, even to the 66% pullback. So anybody who bought above 20 is disappointed, put a buy order right there and looking for a breakout or get a second leg up. So they're trying to basically fix because they bought a decent bar, and this bar is now weak, so they're looking for continuation. I didn't buy above 20, but I did say if you wanted to buy, it could be okay. You just have to be careful. Since the pullback bar is not that big of a deal, is now they bought again with a limit order, and they're fixing their stop order entry, but they're hoping they're going to get continuation with this entry. So this bar has to close. I'll tell you. It has to close above 67.50. Is somewhere around 68 and 68.25. If the bulls get that, they're going to continue to go higher, where I marked. If the bulls get that, they're going to continue to go higher, where I marked. But it's also the 50% of the trading range, and it's challenging the bulls. So basically, I'm still flat. I didn't like this, and I missed my entry from here. It's confusion when you get this big up, big down. What is happening? How come we never tested this support? That's also confusion. But the one thing that is in front of you is that markets, even though it took out that low, didn't spend too much. It's taken out these structural highs. So we are still bullish. It's a trending trading range in a way. So most likely it's going to go up here. If we can sell again, that's fine. But if we start to make new highs, we could be going higher in the trending trading range fashion. So bulls are trying to show the rest of the market that they're able to buy above bars and able to make money. So that means anybody who bought above 20 needs to prove that they can make a 225 initial scalp. And that's what the fight is. And if they get that, they're going to try to get a 4-point and possibly 5 points. 6-point would put us into this area, and there's sellers waiting. But failure to get that 2-point scalp, then somewhere in the middle, bears can show up again because it is the bear gap. Bulls are trying to close the body, and if they do is close it where I said earlier. Right, yeah, so they're probably going to try to go higher. All right, so now I want to see continuation for bulls to at least reach the 71.75 or 72.75, somewhere in this area. Could there be still any bear flag upon this down, upon this possible down, and then we get another up? That could be still a bear flag, and they could still sell from there, so be careful. This bar really didn't close the way I wanted to close, but still closed above the profit-taking zone. But did they make any money? That's the question. So if you bought here, yeah, so bulls made money. They did scalp 225. Now they want more. So I like to see them test this right here at the minimum, and then get 5-point. So if they can break through this, probably buyers above this bar. They already entered though. This bar went 1 tick above. Micro doesn't show that. Micro has not yet went above the bar 22 high, but the E-mini did. So target is again 71.75 to 72.75. Let's see if they can get there. Can it sell? I don't know. It might, because of this 50% right here of this big bear bar. Sellers there, big gap. But the market is trying to get back to always in long. We have been always in long. So this was maybe just a pullback and activate the dip buy and go higher. So I would assume we're going to keep going higher. When would I give up? If I end up seeing a huge bear bar, taking out the 22 low and the 21 low, coming back and testing the 19 high, I would exit out if I'm still long. But I'm just going to wait for this bar to close, because the moment that bar closes bullish, if it closes bullish, then bulls are going to jump in. They're going to get the minimum 425, 525, and then they're going to try to close, maybe even get a 10-point out of this. But I'm more interested in the scalp first, buying above 20. So we should be able to get there. If it fails, where can this go? Well, I don't want to talk about failure right now. Still waiting for this pullback to end, the bulls to resume the bull trend and always in long. Yeah, it's a 50% of this big climactic bar. So we know there are always sellers there. And all we made is a 2-point here. Bulls need to do a lot better. Target above, they just need to break this. If they fail, we come down to 22 low and somewhere above 19 high. It's support. Buyers are waiting there. So anybody who bought here, they will buy here and they will break even with the pullback. Market is bullish. It just did a dip buy. Looking for a 71.25, 71.50 area test. If they fail, that's because these bears are still trying to sell with a wedge top bear flag, but we might end up getting a double bottom and go again. Still waiting. That was really nice. 71.50, 71.25. Let's see, 5-point right there. Didn't really test it. They got a 4-point, but I need the 5-point. Especially if they want to go higher, want to test the highs and break out, they have to give us that minimum 5-point. There it is. Okay, we got the 5-point. So that's good news for the bulls, but sellers are here. Since I know that, I put the level, I'm going to scalp here. Okay. Me too. I did too. Could it go higher? Sure, it might go higher, but there were sellers here, disappointed. They will want to sell again. Could go a little bit higher, a little above 41.75 if it wants to continue. But we are in the resistance. Bulls are trying to close on the hourly. They're trying to close above last hour's high and get to the last week's high and then break out. But we're going sideways. You can see that although it was bullish, and then they bought down here, so they're trying to break out. So what's going on there is the exact same thing. Mother bar strategy. It's outside, inside. I'm sorry, inside, outside, inside. Bears fail to close a bear bar, not hourly. So it's going sideways, but the bulls are trying to get above that high, and they're probably going to test. And there's sellers waiting there, wanting to send it back down. That puts us in a trading range trading. And if we do fail, it's market then find the 50% of this hour, first hour. We could come down and test it. If we fail, we could go back again. We could come back. You see what I mean? Like we could be in a trading range. Bears want to come down and completely undo this and test this hour's low. So they want to come down to the open of the day. They want to double top, lower high, and get a trend reversal. So can they do that? Anybody who sold this, disappointed, they're looking for a good sell signal bar. This didn't do anything. We didn't even go beyond that bar 23 low. So they're looking for another sell signal bar so they can bring it at least to the 50% and break even. But we might not only come to that 50%, we could also come all the way down to the close of bar 19. And if we do that, we could continue to sell into the bar 1 low, and we would undo everything. I don't see that bar yet. I don't see that, bear bar, so I can't be bearish. All I can do is buy and scalp, since I see that the bears failed here, bears failed here, so I will buy. And I did. In fact, I actually entered right there 10 contracts, and then I took profit right there. So that was really lucrative for me because it was high probability. But I have to take profit because this is still a resistance, and I cannot be lingering there if there will be any bear bar. See, I can hold a runner because there's still no bear bar, assuming that we're going to test this high and break above and get back to here, because this is a trending trading range now. And on the hourly, I can see that we bought at the 33%, okay, of this mother bar's range, or the 66. Say this is 33, and this is 66. So this whole area is a buy zone. This whole area is a sell zone, and this is do nothing zone. Since they bought here, they go back into the sell zone. It's stalling here because there might be sellers here. But if we break above it, then there will be still sellers probably above, but I think we're going to break out. And if we do break out, we're definitely going to get up here very quickly. So there's a stalling here going on. I just took profit just to make sure if this collapses. If it doesn't, I'd be happy to buy again, but we're at the high of a trading range. So. And these bears are upset, so they want a good bear bar. So there's a higher potential of that getting bear bar here, and this is another reason why I exit. And there you have it. They're trying to sell. If that bar closes really bearish, it's also up on this, down on this, up on this, down on this, up on this, and there's a wedge. So the market wants to come down and test this area and possibly here. If we end up coming down all the way here, better believe it, we're going to test there as well. So you have to find these zones. Where are the limit sellers and limit buyers are. That gives you support and resistance. But that doesn't mean every support and every resistance is strong enough to hold or strong enough to buy or sell. If there are not enough orders there, bulls can still resume. They're still trying to resume the always in long, and they have become always in long again. They just need to break this resistance. So in order for this to sell, their limit orders already activated, right? Bears need a strong bear bar. If this bar fails, just like the 23 and 21, then majority of the bears are going to exit out voluntarily. When they exit out because they realize they're not going to be able to fix anything, or they're just going to wait and not going to sell anything, and they're going to wait to sell from this level because, look, they sold at the highs, they made money. They sold at the highs, they made money. They could do the same thing, and until they wait for that to happen, bulls can start to print big bull bars, and we can break above this high. That means we could get up to last week's high very quickly. Okay? Everything is, all your answers are in the bars. The way that they open, they close, it's all in there. Let's take a look at the questions. Is it reasonable to think bulls want a measure move based on a big bar 20? Well, there's a measured move there, but it's doing deep pullbacks. I did say that this is a measured move. Now for 20 is I would not measure that because I'm getting my measured move from structural breakouts. Okay, so structural breakout here goes up, market is bullish, then comes back down. There's a huge micro channel. 1, 2, 3, 4, 5, 6. Okay, I should have said this was your support, but I wanted to see market to come down here a little bit. Okay, a little bit further more down. They didn't. They bought it quickly in this area. They're trying to swing. They're trying to get back to the highs and break and get to here. This I don't know how to measure that. Doesn't make sense to me. If you see any reason to measure it for measurement, go for it. But that just doesn't make sense to me. And I did say, be careful here. I don't know if anybody paid any attention to what I said. It's a cup and it needs a handle. Okay, it already broke out. This was, I think it was the 10 o'clock news. Yeah, so that was the 10 o'clock news. 3 bars, 15-minute chart, hence 3 bars. So this is a news bar. Normally you would have expected a pullback and then breakout. So after that news, this is the handle. So they're still trying to go higher. After that news, this is the handle. So they're still trying to go higher. So you can also, let's see, they haven't reached the measured move. So that deep pullback is basically the handle, and bulls are still trying to break to the upside. Now, if anyone who sold this, they did, bar 26, but it's an inside bar. Okay, it didn't close, it didn't take out or come near the open of 25. But these bears who sold are not getting bear bars, are not getting any continuation. There's still 2 minutes and 2.5 minutes, so there's plenty of time this bar 27 to close bearish. But they're disappointed. They sold underneath 26. They sold the close because they want market to come down. Okay, if there's stuck here, they sold there. Their break even is still here. They're disappointed. If suddenly bulls start to close bull bars, they will exit out. And when they exit, just like I explained, we could end up getting bigger bull bars. So bears got about 2 minutes to close this bar bearish enough to continue to come down. It's still resistance. It's the first sell signal. They might be trying to get a second sell signal here. And they're going to try twice. Okay? But if the second time they cannot, they're not able to sell, then we're going to break this resistance because we have a measured move target to the upside. And then the April high is right there. Market is still bullish. It is trying to stay bullish. You now have OIO or is possible IOI. So it's either, it should break out. I think bears are disappointed now, bar 27. So I'd like to buy again, but I need to see these bears are done. Okay, so, and you can see that if you take a look at here, so let me get rid of this. Let me get rid of that. Outside, inside, okay, another inside. So the bar 26 and 27 are both inside bars stuck inside the outside bar. So you have OII. It's a breakout mode. See, bears try to sell, trap. So the bulls are breaking out, especially if this bar now closes bullish. Those bears are now going to exit out, and we could end up getting bigger bull bars. Have you noticed what just happened there with bar 27? It tested the outside bars low. Traps. Bulls trapped them, and it closed the bar high. It opened here. They tried to sell the close of 26, just like I said they would, but they're disappointed. They came down, failed. Okay, bar goes and closes high. So bulls are trying to break above. They're trying to close a bull bar above that bar's high and get to the first target, which is right there. But this is still a trap zone. It's never been tested before. So there's still sellers here. But if the bulls close this bar bullish one tick above bar 25 high, then they're going to try to go higher. First to here, here, and a measured move. See how the 27 hit the trap zone and got trapped and it just went up? I still don't have a bull bar. This is the second time now is bears are trying to sell. Remember I said I have sell zone here. Where was that? Somewhere here. And I said this is the first sell signal. Is they're probably going to try again, but they're failing. So if the bar closes bullish, bulls will try to go higher. Yes, it is. It's lunchtime, so it is the stick sandwich right there. So 25, 26, it's OIO, basically. And there you have it. So bulls are breaking out. Bears exited here. They completely got destroyed with bar 27. You get an outside bar, you get an inside bar. This area is a trap. Always expect, especially outside bar is bullish, buyers are there. This basically is what Quant Technology, I think that's what Ali Afshari's company, I'm not so sure, is. I watched this couple of webinars. This is, he's got a whole system about this. And I said, wait a minute, that's my system. I'm like, wait a minute, it looks just so much like my system. This is great. So I'm loving the fact that someone like Ali Afshari actually put together a whole, I mean, his is a lot more complex and sophisticated. I'm just doing this as elementary, as simple as possible that makes sense to me. And so I was kind of very happy to see that, and that's why I'm teaching you guys. I know there were a couple of, when I first started in July, I started putting these levels, and I was teaching you guys that mother bar, inside bar combo, and tell you guys exactly what. There were people actually saying horrible things about me, and it went on for months, I have to tell you. But I have a reason why I'm showing you, because it works. And then a month later, after October, I saw it because Richard sent me a couple of links, and I was like, thank you, Richard. And I started watching. I couldn't believe my eyes. I'm like, this is great. I really am showing something valuable to people in the trade room. They just need to pay attention. And I don't care if you're mad at me. It works. It's a moneymaker. Okay? So if you're not happy with any of this, fine. Then go back and study L. Brooks's inside, outside, outside, inside, outside, outside, inside, inside combo. He's got videos created just recently. Watch them and you're going to learn a lot. I'm just giving you, with that in mind, actual solid profit-taking points and exactly what to look for. Whether it's a trap, or will the trap will work, or is it going to be a breakout? When would the trap work? When would it not work? So yeah, just wanted to make that disclaimer. Just because I'm using Fibonacci levels this is a fib level, okay? It's just, if I actually use the fib level, I'm actually measuring, okay? Here we go. This is created with Fibonacci, okay? So if I actually use my template, I'm actually looking for a measured move target. And the measured move target is right there, 200%. Yes, in between this is there, but that's not what I'm looking at. I'm looking at this. But other people see it and they just bend out of shape. And, you know, I'm trying to keep the chart clean as possible, but I need to be able to explain what is happening there. Because some machines do measure these fib levels. They might be using it, but hedge funds, they don't care. They don't use Fibonacci. They would laugh at you for using it. But some other people can say, no, they do use it. So who do you believe? I'm just going to go with what L says. And if L says that hedge funds, they don't use Fibonacci, then they don't use Fibonacci. I'm only using it because I'm not a hedge fund. I'm a retail trader. So I have to be quick about taking profit. Okay? But once I saw that presented, there are several actually presentations, that this is it. This is important. These bar combos are very important. So the stick-handed, which is what I call the fancy way of saying breakout mode. Okay. I don't know, but I'm sure there are some free ones. I haven't searched. I went directly to the webinar files. I would recommend you to connect with perhaps Richard and sign up for the next event that may take place. I'm hoping in New York City this time. So, you know, I'm sure you can then have access to those. But those presentations are only available to those actually attended the event in Orlando. Oh yeah, if it's in New York, imagine the fun we would have. Whew. It should be in New York, but then again, it could be in Timbuktu. I don't know. Anywho, so we have tested this climactic bar high, but it's a trading range high. You're still in the sell zone, but if you actually measure, look what the bulls tested. And took profit. Okay, so right there. They tested this, broke above, and then started to take profit because they didn't take profit right at the shallow target. They're trying to get up here. If you do this exercise on the micro, hang on. Let me show you. Micro actually is tested, right? So tested the target. See? It's an important target, 160, 180, and then the measured move target above. But that doesn't mean they're going to be able to go there. Look, if you're trading micro, it works. But if you're trading E-mini, they haven't really tested that, and they're probably going to. Look how close they've gotten. Generally, if I'm going to these going for these targets, my exits are one tick below because I know machines do the same. Because they know other machines may want to get that target, but other machines will try to front run their targets. So I'm retail, so I always front run my targets because this is the top of the trading range, and it could fail, and I don't want to be stuck in that because after all, this is double top. This is still lower high. But E-mini is going to get that. It probably may even go one tick above at the minimum. Could it fail? Well, if it closes a big bear bar, oh yeah, it can fail. That's why you should always front run if you're going to scalp. You can always leave a runner, expect this to be tested. Since we are still always in long, market is trying to get above this high. It's trying to get up to 200%. So there's not much space there. They should be able to get that target. If they close the bar above the level, then expect this to be tested, even if it comes down a little bit. it's going to go up to the measured move. There you go. So target tested. So the micro tested, E-mini tested. Guys, it's almost noon. Brad will join in a couple of minutes. So I'm going to be signing off, but I'll be around. Okay, so I will talk to you guys soon. Monday, although I don't know what the schedule is. Let me take a look. Yeah, so that's May 1st. Schedule will be posted that day. So I don't know who's on Monday. Could be Al Brooks. Okay. Oh, it's going to be online? Really? Oh, no. Can we vote against it, Richard? I mean, oh, I'm not happy with that. But I don't have a say, do I? Okay, got it. Okay. But we should do a mini event in New York City, just for the fun. Oh, I see. Yeah, I gotta tell you, I mean, I don't know how Al or Allie or anyone can open trades and be calm. You have to be really, you know, I don't know. I get very nervous when I open trades in front of other people. Even if I know 100% I'm going to hit the target, I have so much respect for anyone who can actually trade in front of you, as long as it's not sim. Okay, so here we go. We're going to the measured move target right there. Almost there. So these are solid levels, and that's your measured move from this. Now, the person who asked me about the bar 20 is, why wouldn't I use that as a measured move? Now, what would you do? You're basically measuring is, you could say, if anyone was selling, you know, they might have put their stop there and the bulls ran that stop. So what you could do, measure that. This would be your measured move, is right there. Okay, so, but that's not measured move, that's 1R. And if you're getting your 1R, we might pull back a little bit. We can go to the 2-to-1 target. That's 1-to-1 target. So I'm not really looking at a measured move perspective. My measured moves are generally structural breaks. This is, to me, entering with a pullback and swinging for 1R and then 2R right there. Okay. So this is now broken. We made a new high and met that target. Also, this target met. But if you are doing this, you should be looking for 2-to-1 target meet. Okay. All right. I am done with my session. Hopefully, you guys learned something. We knew that I warned you about, okay, this double top. I warned you about bears entering, getting disappointed, and if the bar closes bullish, they're going to buy. And when the bears exit out with disappointment, we're going to get more bull bars stacking up. And I measured, I gave you your scalp targets. If you're swinging, this is your 2R, but expect a quick pullback. You're at the top of the trading range, okay? And bears who sold here, they're probably bears here a little bit above. Okay, sometimes you get these when I'm trading with risk reward, okay, is before the 2R, there's always a half. So this is 1, this is 1.5, and this is 2. Sometimes we go there and then we fail, but we meet that 1.5, okay, so before. Sometimes we talk about, oh, the 2R fails. It's not that necessarily 2R is failing, it's that anybody who bought here getting a lot more than what they bargained for, but generally right around the 1.5, sellers are waiting. Because especially if there was a big sell event here, and if they cannot sell here, they're going to sell a little bit above. That could be 2 points, 3 points, 5 points, maybe 10 points, but they're always sellers. So now these sellers are trying to sell here, but we did break above this high. is as long as we stay above the bar 25 high, okay, so we might pull back here, but we could still bounce and go to that 1.5 and then 2. Okay, but once we start to get big bear bars, and those big bear bars, okay, end up coming into this trading range, breach half of that, then we're going to test here, and then we can even sell further. But we don't have those bear bars, so you don't have to worry about that. Okay, so we're still bullish. There's still room to the upside. I think the bulls are still pushing towards, I said, we're probably going to test the high of this bear bar, and we just test it. If we can, what time is it now? Okay, so it's 12:30. If we start to close a bull bar, expect continuation is into the last week's high. Okay, so the market could still push towards the 4,200. So it's magnet, and then a little bit above 4,200 round number. Let's see if we can make it. But anyway, so I'm curious to see what Brad is going to say and do. So I'm going to be following his commentary. So don't sign off. He'll be joined soon. Bye, everyone.
Hey everyone, I'm getting a few things set up and I will start talking. All right, hope everyone has had a good morning so far. I'm getting the Discord pulled up. Let me just check one more setting here. Type bull channel, so probably a little too early to sell. So let me get this moved out of the way. Sorry about that. I've still got to figure out why the gain on this microphone changes. It must be a GoToWebinar setting. I changed microphones and the gain will automatically change on certain applications. Anyways, daily chart, we had a very strong day yesterday and the bulls are getting pretty good follow through today. One of my thoughts going into today was yesterday was fairly climactic, and because of that, I thought the odds favor a second leg after yesterday. What I was unsure of was, would we have to pull back first? So we have a big bar yesterday, and it's a big enough bar that I thought, 50-50 chance we would get 1 or 2 days of a pullback and then a second leg. But so far, the follow through today is really good, and that increases the chances of higher prices. My one thought is it was reasonable to sell in this area. And because of that, the bears got trapped. There would be bears selling this high and scaling in higher. And what do here? If you're a bear and you sold Wednesday's high right here on Thursdays during Thursday, you clearly got trapped and you had no way to avoid a loss. And because of that, that increases the chances that we are going to have to, that the first reversal down is going to fail. So to me, even if we pull back, we're probably going to find buyers and go higher. So far with today, obvious magnet, I'm just drawing some. I don't think we're going to get to the open of the day. We've got the high of bar 12. I do believe we're entering a trading range. And if we just look at today, forget lines, forget drawing all sorts of things. I'll draw some more things in a minute. We rallied from bars 1 and 2. Here we have a tight bull channel, but look to the left. To me, this area has an increased risk of pulling back somewhere down here. Big bar 18 and 19. How many strong trend days have a big sell-off like 18 and 19 and still rally? So to me, there's probably sellers somewhere up here. if I'm a bear, I might not be, ecstatic about selling this tight channel, but to me, if I'm a bear, I'm on the sidelines, and at some point, I'm going to become more and more eager to sell. So would I be surprised if we sell off to the midpoint of this range? Not at all. I do think the bears need to do more, but we could easily get a fairly deep pullback. Always have to wonder about the 19 close. It was reasonable to sell the close of 19, and it trapped any of the bears that sold the close. So we will probably, I don't know if we're going to test the 19 close. It's pretty far away, but I suspect that a bear that sold the 19 close and scaled in higher will be able to avoid a loss. So to me, I would not be shocked if we get a fairly deep pullback. So what would a deep pullback be? An obvious one would be a 50% retracement of this rally from the low of 19 to the high of 19 to the high of 32. So I'm just going to mark where 50% is. Right here. So that's close enough. So when you look at this bar, does that look, are you thrilled if you're a bull, or are you saying, gee, this isn't good? Go to a 1 minute chart. Pretty tight bear channel. First slope may fail. So I don't know if we're going to just sell off immediately. I don't think we will, but it would not take all that much to get down to a 50% pullback of this rally. We don't have to stop here, but I do believe we're going to go sideways. So what do you do here? Do you buy the close of 34? You can, but to me, I don't think it's really all that ideal. If you're buying the close of 34, it's probably a scalp. You're buying at the top of what is likely a trading range, and trading ranges have a higher probability of low probability events happening. A good example is yesterday. So let me go to the daily chart here. We had a strong bear breakout followed through testing the March 22nd high. And this is a low probability event. We should not have gapped up and gotten a very strong bull bar yesterday. We did, but the reality is the bears should have gotten a second leg down. In other words, the bears should not have gotten trapped. They should have been able to at least scale in higher and get out break even. That is an example of a low probability event. And in trading ranges, we were in a bull trend from March 13th to April 18th. Bull trends evolve into trading ranges, not bear trends. So even though we were in a trading range down here with strong bear bars, trading ranges have a higher tendency to do the lower probability thing. And higher probability events tend to fail more frequently. For example, let's find one. You have a strong sell-off to December the 19th. We get a bear flag. Somewhere in here is a low 2, low 1, low 2 somewhere in here. And flags, which are pullbacks, typically lead to trend resumption. But instead, we got a bull breakout of this bear flag and a measured move up and a rally up to here. Over here, strong trend from December 2020 to the highs of February 2nd. We have a pullback right here. It's a bull flag. 2 legs down, leg 1, pullback leg 2. It's reasonable to buy February 10th. And if you're buying February 10th, you're thinking, yeah, this is probably, it's a bull flag. Bull flags typically lead to higher prices. In a trend, second entry buys, which is right here, typically lead to higher prices. In a trading range, there's a greater risk of second entry buys failing. That's why there's a greater risk of bear breakouts of bull flags at the top of the range and bull breakouts of bear flags at the bottom of the range. Now, to me, I think the important target of the day is really probably closer to here, the midpoint of the day. It'll be interesting to see, can the bulls get another strong bull close? So obvious targets, yesterday's high, that will be important. I have the open of the day marked. but I do not think we're going to get down there. I'm going to delete this 50% pullback. It's pretty much at the high of yesterday. And yesterday's high is going to be more important. So 35 setting up a high 1 buy or a high 2 buy if you want to conclude that 33 is a first entry. It's an inside bar. Generally speaking, high 1 buys like 35 are strong buys and they're okay to take. But here, you're getting a high 1 buy at what is probably going to be is what is the top of the trading range. And you have to ask yourself, do you really want to buy a high 1 at the top of the trading range? Yes, we're always in long, we're in a bull trend. But bull trends do not typically have this. So my problem here is this sell-off from 17 to 19. So I'll show something of that in a second. And by the way, I want to kind of add in more talks on, I don't want to say psychology, but really just when you're trading, you have to know when you're at your best and when you're not at your best. And for me, for whatever reason, I slept terribly last night, and I'm very tired this morning. And one of the things I like to do is, I think it's good to track your sleep and be mindful of just how well you sleep in a day, how much energy do you have, because if you think about trading, it's kind of like trying to compete in a professional sport. And by the way, that high 1 buy, big tail. So for me, I am not interested in buying up here. I think this is a trading range, and if I think it's a trading range, I really don't want to buy high. So anyways, I think it's important to track sleep because your sleep has a direct impact on how well you make decisions. And the reason I'm bringing this up is, for me, woke up this morning really tired, and I started actually watching the market around bar 22. I did not watch any of this, and it's just one of those things where I've learned the hard way of the longer you trade, the more you start to get kind of in tune with how you're feeling. And I've learned when I feel like I'm not at my best, but I try and trade anyway, I almost inevitably do something that I regret. And you have to remember, you're human. You're not a computer, and your edge is only so big. Therefore, if your edge is only so big, you have to be very cautious and aware of where you're at from a performance standpoint. So there is nothing wrong with trading smaller on certain days or trading significantly less. Trading is an endurance game. It's not a sprint. And too many people, they end up doing the right thing a lot of times over and over and over. Let me back up. Too many people, they do really well for several weeks, several months, but then they lose their endurance of what they're doing and they end up screwing up. They end up trading too large. I've done that, I don't know how many hundreds of times, where you have a really good week, really good month, and you screw it all up in a short period of time because you get, whatever you want to call it, arrogant, cocky, and you think you figured it out. And you look back and think, if I would have just traded at the same position size, I would have done okay. And doing okay is what's most important. If you listen to Al, you'll always hear him say, you just need to be 51% better than everybody else. You don't have to be the best. You don't have to take 30 trades in a day. You just need to do a few things reasonable every day, and you'll be okay. So anyways, I'll talk more on that later. So 35 is a bull bar. And for the bulls, they want this to be a high 1 and a micro double bottom 35 in the current bar and rally. The bears, they see 35 as a pullback. They see 34 as a big enough bar to lead to a second leg down. And you also have bulls who bought the 33 low. So bulls buy the 33 low, thinking tight bull channel. They scale in lower. and they're deciding what to do here. So if you're a bull and you bought the 33 low here and scaled in lower, what are you thinking? Well, you're probably taking partial profits here. I certainly would. And if you sell, I think it's okay to sell up here. I think it's okay to buy. For me, I just really don't want to buy when I see this right here. You just do not, how many small pullback trends have this? This is just too much selling pressure. Let's go to like a 30-minute chart. Selling pressure. Let's go to like a 30-minute chart. Strong channel, strong rally, deep pullback, tight channel. To me, we're probably evolving into some form of a trading range. Yeah, DARGERAK. You asked a question and asked if I'd talk about trade management more. And I certainly will. Trade management is one of those really challenging things because the longer you trade, the more you can apply experience and discretion to the trade management. I think a lot of traders, this sounds kind of bizarre, but a lot of traders, when they're trading, if you look at people like Al, and I've heard him say this just numerous times in the trading room, where he'll buy the market and he just has a stop on the price ladder somewhere. And it's not necessarily below bar 1, it's not over here, it's just somewhere on the chart. And that is because he knows he can exit the trade long before he gets stopped out. So 36, it's a strong bull bar closing on its high. That's good for the bulls. If you're an always in trader, do you buy above it? You can. You can buy above 36, stop below 36, stop below 35, betting on a continuation and breakout of a trading range and a strong rally. But for me, I'd probably wait. I don't think there's nothing wrong with buying. And if you're selling, I think it's hard to sell after you see a bar like 36. So if you're a bear, it's reasonable to look at 35 and sell above it, thinking probably sellers above and more sideways. But then you see a bar like 36, bull bar closing on its high, and you're probably thinking, yeah, I don't know. Maybe I should just get out of this trade and move on. And I think that's what a lot of traders would do there. So there's a potential for a measuring gap here and for traders to give up. But trade management is challenging because when you use wide stops and scale in, you have a lot more flexibility, but you have a lot more ways to screw up and screw up big. That's why I think a lot of traders should really focus on trading trying to go for twice the risk and work on increasing their risk reward and trying to increase the probability. So in other words, try and find reasonable stop entry trades where you can at least get 1 times your risk and possibly 2 times your risk. So this is what I was talking about. If you're a bear and you sold 35, you might be getting a little bit nervous. Whenever you're trading with limit orders, the one thing you always have to be on alert and looking out for is getting trapped on a bad trade. So you sell the 21 high, or excuse me, you sell the 19 high during 20, and 21 barely lets you out. But if you didn't get out during 21, look what happened. You never had a chance to get out. I still think the bears that sell 35 and scale in are going to make money. And a common way to do that is some traders, what they do is they sell above 35 and they put a stop about 1 times the size of the bar, and they scale in higher, and they think to themselves, if it's going to work, it shouldn't go 1 times the size of the signal bar. Obviously, your probability is going to be better if you can use a wider stop, but the problem with the wider stop is traders will inevitably sell above a bar like 19 and never get out. So this is important. There's 2 things happening here. One is the bulls that bought above 36 are scalping out. They're scalping out with a small profit or small loss because it didn't race up. Bears, as it started to go up and stall, are selling. So the bears are making money selling above 35, which is good. Next, let's look right here. Let's take 35 for example. If you're a bull and you bought above 35 at 79.25, your entry would be 79 even, but you need it to go up 1 tick. The easiest way to see if stop entry traders made money is add 2 ticks to the high of the bar. So if the high of this bar is 78.75, 1 tick is to get in, which would be 79 even, and then the other tick would be to get out. So to me, the way I look at it is the market needs to go to, at a minimum, it needs to go up 2 ticks, which is 79.25, and then 80 and 81.25. So 81.25 would allow traders to get out. And obviously they made 2 points, and it looks like the bulls were able to scalp out with 3 points. So if you're a bull and then you see 37, how are you feeling about that? To me, 37 is pretty disappointing, and I would get out of longs below 37. My concern is what I've been talking about. The close of 19, I'm always wondering, when you're in a trading range, when it's reasonable to sell a bar like 19 and sell more below a bear bar. And to me, I think 37 is pretty reasonable to sell, and that increases the risk that we might get down here. Now, the bears have a lot of work in order to get down there, but it can certainly happen. So I think the problem with that is we could sell off pretty quick. The bears, it's a second failed breakout of the 12 high. Still a low probability short below 37. And if you sell below it, you put your stop above 37. There's a few ways you could manage the trade. One way is, you keep it really simple and you sell below 37, stop above, and you just don't get out. And you set your target somewhere down here. Or other traders, they will, what Al will sometimes do is he'll sell below a bar, stop above, and he'll give it some period of time. Maybe he'll give it the signal, the entry bar, he'll let it close. Other times, so the more reasonable the trade is, the longer you might be willing to hold on to the trade. The lower the probability of the trade to begin with, the quicker you're going to get out. A good example would be, I'll add this back in a second. A good example would be the 26 low. You sell below 26. It's not a great trade. It's a micro channel since 19 to 26. So however many bars that is, it's a tight bull channel, probably going up to the low of 17. And I'll talk about why in just a second. But anyways, if you sell below 26, you have to think it's a low probability trade, which means it's on the bottom of the scale. It's probably, is it 40%? Maybe. It's probably a little bit better than 40%, but it's not great. So if Al was taking that sell, he might give it 10 or 15 seconds. And as the bar starts to go down and stall, he wants the bar to crash. So if I was selling below here, I want 27 to crash really, really quick. And if it doesn't and starts to go down and pull back, I may just get out of the trade for a small loss. So I think a lot of traders bail out of the trade much quicker. Here, we are 3 minutes into this bar, and we're right around the entry price for the bears that sold below 37. So if you're a bear and you're selling below a bear bar, are you thrilled about the momentum? Of course not. You're thinking, why aren't we selling off? So if I'm trading below 37, to me, I think it's okay to wait for the bar to close, but you have to ask yourself, if 38 is not a strong bear bar, then a lot of traders will just start scalping out because they'd be disappointed. I want to show a slide here. Price actionable. While I'm looking this up, I want to answer your question. You said this, so does Al use a time filter when he places some trades? Yeah, I mean, it depends, and it depends on the context. In general, the lower the probability of the trade, the faster you're willing to exit. So here's an example of something I want to show real quick. And give me 1 second. Okay, so here we go. So this is I'm just trying to full screen it, see what happens. Yeah, I guess that works. Okay. So this is a slide of November the 8th, 2022. And what's fascinating about this day is you can see here's the full day. We had a tight bull channel, trend line break, and basically a double top with this high and this high. And we formed a wedge, 1, 2, 3. Anyways, you see this bar right here, which is bar 1 here. If you were a bull and you were to buy below the low of 1 or buy on the way down, you never had a chance to get out even remotely at break even. This is a 1-minute chart, and this is the pullbacks of every bar during the formation of this bar and this bar. And the point I'm making is it sold off really aggressively. And I remember watching, I sold a small position below 1, and a very small position. And I remember trying to add on as it was going down. And I tried to sell a few ticks higher, and I could never get filled. And ended up just having to chase the market for for 3 or 4 minutes, and finally just sold more at the market. But it's just it's a really, really good example of what you want to see when you're selling below a bar. So look at this right here. So let's go to a 1-minute chart. Does this look like this on a 1-minute chart? Of course not. I'm always thinking about scale-in traders and limit order traders. Can limit order traders make money? And if they can make money, then who's trapped? So if I'm a bear and I sold below 37, I want every bull in the world that bought below 37 to get squeezed out of the trade. My hope, whenever I'm selling below a bar, my hope is I get a bar like 17, just a massively big bar that just goes all the way down here. Obviously, that is, almost every stop entry. That is not going to happen, but that's what you want. And if that's the case, then what you don't want is the opposite. So what's going on here? Right now, we're forming a tight trading range with a tight bull channel. And that's part of what I've talked about on the euro dollar for a couple of days. Let me just pull it up. So euro dollar rallied, deep trend line break. I think we're forming a trading range on the euro dollar. This is a daily chart. Now, one problem with the euro is this channel up's fairly tight, and an easy way to look at a channel and decide if it's tight or broad is to just use the moving average. If the market is, we're getting good bear bars, but the market is primarily above the moving average for most of the bars. Therefore, you know what that means. You know that means that the bulls are fairly strong. And the bears, what I've been saying here, and at least what I'm trying to articulate, is the bears need to get closes below the moving average. They need to start getting something like this. And as long as we stay above the moving average, it's a problem for the bulls. And the bulls will be less resistant to buy, it's a problem for the bears, and the bears will be less resistant to buy. It's the same thing here. We've been above the moving average since, 22, 23. Until the bears can start to get good closes below the moving average, we can go a lot higher. So we don't have to stop at the highs of these trading ranges and reverse down. I think we will, but we don't have to. And if the bulls get an upside breakout and follow through, we could certainly go up higher. You always have to wonder, it's the end of a month, so last month is at 95. That's a little far. It's about 34 points away. It's possible we get there, but I don't know. I'm not all that convinced. We could get to 2,000 or 4,200. We'll just add that one just for fun. You don't need, that did not go as planned. There we go. I try to keep a lot of charts just fairly simple and clean. But What you need is just the bars to the left. So back to filters or time filters on trades. To me, it depends on, I think time filters are important, and it depends on the context of the trade. So a good example of a time filter is, let's take a breakout. So here, what happened here? Well, we have obviously a breakout to the upside, but it's also parabolic and it's not sustainable. We have a rally, bar 1 and 2, doji, 2 bars, doji, strong rally. So it's biclimaxes. It's a surge in momentum. That's all a parabolic wedge really is. Whenever you get a lot of surges in momentum, think about a trader that bought above 1 or 2. They keep getting a rally and a pullback, rally, pullback, strong rally, higher prices, and they start to think, yeah, I don't know, this might be unsustainable. Maybe I should just take my profits. This doesn't look orderly. Let's take yesterday. What made yesterday so strong? We formed basically a parabolic wedge up to 10, 3, 6, and 10. And we have a strong bull bar on 9. And we got 2 legs down. Parabolic wedges typically are legs in a trading range, and they go sideways. Most parabolic wedges are minor, but that's for another discussion. 23 and 24 reset the market cycle. So we were in a spike, channel evolved into a trading range on 20. Basically, we entered breakout mode. We have a breakout. We have follow through. Now we're in the breakout phase. And when you look at this, it's possible 23 and 24 was a second leg trap. But the problem here is, and by the way, speaking of right now, I think we're going sideways. That's why I'm talking about other points. So just to, I would not be in a rush here. And that's why I'm kind of bouncing around with other discussions, is because to me, this is a trading range. And until the bulls can get a strong upside breakout, I think we're going to try and test yesterday's high. So for me, I'm not convinced that the bulls are going to win here. So I think it's still pretty close to 50-50. But anyways, I want to talk back about this for a second. We had 2 legs up, and 24 and 25 reset the count. So we had a spike, pullback. We started to channel here. But you can argue 28, 29, 30, and 31 is a new breakout. So maybe that reset the count. Market cycle, breakout, to a channel, to a trading range. We have a channel here. And what you notice with 47 and 48 is we got an upside breakout of the channel. So strong trends constantly form spikes in channels that are really tight, and then you get a strong upside breakout, and then it keeps resetting. But it's still fairly orderly. It goes sideways for a lot of bars, and it does not look like this. So if you're a bull, are you waiting for a breakout or a pullback? To me, this is a trading range. And if you're in a trading range, what do you do here? If you relate this back to let's say the videos on the Brooks trading course, what would Al say here? He would typically say, 39 is the bull bar closing on its high. Do you buy it? And you can, but I would not. So where's the energy? If you're buying high in a trading range, you're buying high in relative to the past 20 or 30 bars, and the market's gone sideways for 5 or 6 bars, do you really want to buy up here? So that is the issue I have with this current bar. Now, if this current bar looks like 39, then I will start to change my opinion a little bit. I'm on my other computer, and I'm going to see if I'm looking for a few examples from the encyclopedia. But what I'm looking for is examples where you get a strong, the main concern I have is we have a strong rally, strong sell-off, big up, big down, usually leads to a trading range. The bulls are trying to get a small pullback trend, but bears not really making money since 20. So that's good for the bulls. But I don't know. I'm a little hesitant here. We're also around bar 40. 40 is a common time for the market to reverse. Now, because we're in a bull trend, reversal means disappointing the bulls, probably trying to close below the midpoint. I don't think we're going to get to the open of the day. I have it drawn just because, it's the end of the week, end of the month, crazy things happen, and it's possible we get down here. But for me, I don't think we will. The bulls trying to break above the highs of 32. They're trying to break above a wedge, 32 and 37. So the bulls want a wedge top. You can call it an expanding triangle here. Doesn't really matter. The bears, they really need to get strong bear bars. Otherwise, traders are going to be hesitant to sell. It's good that the bears are selling above bars and making money, but they really need to make money selling below bars. You can argue they made money selling below 37, but to me, whenever I'm deciding, if I keep it really simple, and whenever I'm trying to decide, did traders make money selling below a stop entry, selling below a bar, or do they make money on a stop entry buying above it? I typically just use the range of the bar as an easy measurement. So for me, when I think about selling below 37, I know I'd put a stop at a minimum. It's got to be at least one tick above 37. So to me, if we didn't at least fall a measured move of the signal bar down, then I'm pretty suspect of, to me, I pretty much conclude they didn't make money. So what about selling below 33, stop above 32? You can argue they made money there. You could, but who's going to sell below 33? If anything, you're selling below 34, and 34 only went a few ticks lower. So we are in the process of trying to create a small pullback trend, which means this can go much, much further than we think. While I'm looking up the slide, I'm curious in the Discord for people there, what makes, and by the way, just since people can ask questions in the Discord, I'm going to go ahead and just turn on the GoToWebinar question box as well. So it's easier for me, if I'm turned on the GoToWebinar questions just for people not in the Discord, but it's easier for me to see the questions in the GoToWebinar because it makes a big, red question mark pops up when one shows up, and it's easier to keep track of them. But if you want to ask questions, feel free to ask them in either place. I'm curious to know, though, what has been the most difficult part of today? Difficult part, confusing part. So 39, big bull bar, 40, it's a small bar, and then 41 broke out above 40. Forming a tight channel, and again, while I think this is a trading range, I am certainly not saying that this will not end up being a trend. Whenever you start to see tight channels and one side not really making money below bars, and it's fairly difficult to make money selling above bars, you always have to be alert to the risk of an endless pullback. So we could certainly go a lot higher. What are the chances we get up to, 2,000's close, but I don't know. I suspect we'll probably have to pull back first, but I don't know. I suspect we'll probably have to pull back first. And it did it again. For whatever reason, when I change it to the 60-minute chart, it just kind of goes crazy, and I've got to do this whole thing again. For once, this actually didn't change up everything all that much. For me, when I'm trading, I typically just use one chart. So I do not use this screen to actually trade. I will use it to write the blogs, look at the daily chart. But for the most part, when I'm trading, I'm just really looking at one screen. And I try and keep it just really, really simple. So for me, I've usually just got a chart and then a matrix, and I'm just looking at this. So to me, the bears are getting squeezed here, so we've got the potential to go higher here. Okay, we got some questions that popped up, so let's see here. Would you buy 39? Is that a high too? 39 is, I wouldn't call it necessarily a high two. I mean, for me, the way I see it, you could argue it's 2 legs down, leg 1, 35, pull back, leg 2, 38, 39. I guess that works. It's a second attempt. Really, it's more of a third attempt to break out of the 12 high. But 39, it's a good bull. It's a strong bull bar closing when it's high. If you got out a short, if you're an always in trader and you got out of shorts below 37, I could understand the logic of buying again above a bar like 39. So I think it's okay above 39. But technically speaking, I mean, if you're really being traditional with leg counting, you have a breakout, 37, new high, pullback, so 39 is a high one. But, I think it's okay to call it either. What do you do here? Do you buy? It's probably okay to buy, but the first reversal down probably will fail for the bulls. They want to measure move from maybe this range right here. To me, I'm a little hesitant to buy up here with all this trading range trading. And my other problem is we're just really climactic on higher time frames. 15-minute chart, we have not touched the moving average, and let's just count. Whenever I'm measuring, I want to count the number of bars on TradeStation. What I often do is I take a line and just connect the points from one to the other, go to edit trend line, go to labels, show labels, bar count, 40 bars. So we haven't touched the moving average in 40 bars. And while the first reversal down is probably going to fail, when you start to get consecutive buy climaxes, we could easily fall below the 12 o'clock low on the 15-minute chart, which is 78 even. And 78 even is all the way basically the low of 40. That's my problem with buying up here, is I think it's buying late and the higher time frame is fairly climactic. So I'm a little resistant to be all that eager to buy up here. I think this might be more of a profit taking area. And with all this trading range trading here, far away from the moving average, I think a lot of traders are going to be more suspicious about this becoming a strong trend. And you can see 42, a bigger body than prior bars, so it's a little bit climactic. Traders using it to take profits. So 43 is the bear bar closing on its low. What do? I think it's reasonable for traders to get out below 43. To me, this is not really what you want to see. Let me just go to a 1-minute chart to keep it simple. Look at a 1-minute chart. We've reversed the past several bars in just a matter of a few minutes. So to me, this is a little bit strong. The bears still need to do more. But when you see, the point I'm making is whenever you see a sell-off, you can see it right here on the 1-minute chart, and it's not really pulling back all that much. It's pulling back maybe 1 or 2 ticks and going a little bit lower. That increases the risk of the market selling off a little bit and going lower. If you're a bull and you see this, you might exit because you think the odds are you're going to get a second leg down. So look at this. Look how many bars we've reversed in a short period of time. We're already back in this range. So traders pay attention to that. And that was my problem with the 15-minute chart, is you're so climactic Who wants to, you know, it's like roulette. I'm not a big casino gambler or games person, but I think it's fun to watch it. And I think it's kind of fun to look at people's psychology with watching them play it. But I always think about roulette just because to me it's kind of simple in the sense of red and green. If these are green bars, if these are white bars or green bars, eventually you're going to get an opposite bar. You're going to get a black bar or a red bar. In other words, you're going to get a bear bar. We haven't touched the moving average in 40 bars. So are we going to stay above the moving average for another 50 or another 10 bars? Are we going to go 50 bars without touching the moving average? Probably not. So to me, we're probably going to get close to the moving average, if not touch it. That's why a lot of traders, when they see that rally, they used it to take profits. So possible 2 or 3 legs up, 32 first leg, 37 second, and then 42 being the third. And if I'm a bull and I bought the close and scaled in, I'm probably trying to get out break even. So I don't think this is not what you want to see if you're betting on a small pullback trend. This is disappointment, and disappointment is the hallmark of a trading range. So again, I go back to 18 and 19 are very significant bars, and they will cause a problem for the day. They make it a problem for the day to become strong small pullback trend day. Lower ends, you ask, what about buying bar 39, 50% pullback with the limit order? Traders did that. So you get a big bar. Some traders, there's kind of two ways to look at that. You had a sell off on 37, 38, 39. So let's go to a 1 minute chart, which I think is right here. 11:45. Yes, she had this sell off. So Lorenz, I don't know if you can see this, but if you can, you had a sell off right here, and then you had a strong rally. The bears should have gotten a second leg down, and they're going to sell and scale in. They're disappointed by this rally though, so they're going to use any bounce, any pullback to try and buy back shorts with smaller loss. So they sell, they scale in, they try to get out break even. Bulls, they know that, so they're buying. They're going to try and buy 50% for second leg. But a lot of traders do that. They see a lot of bull bars. They know there's going to be a pullback. They buy 50%, put a stop below. And that is basically here. So they buy, instead of buying the close, they buy 50%, put a stop below, betting on higher prices. So what happened here? We sold off and bulls started buying aggressively. Notice the high of this bar, 38. I mentioned that some bears would sell above 38 at 79.25. Look at the low of this bar, 79.50. So the bears that sold the 38 high and scaled in, price came one tick from their entry. So that is a sign that bears are starting to be able to exit trades and avoid losses. Manja says that it's difficult to become bullish when you see 18 and 19. That is exactly the point I'm trying to make. The market has memory, and 18 and 19 is strong. And then also, I want to kind of paint, let me see if I can find a slide on this. I want to point something out. Whenever you get it's kind of a second leg trap variation. So if you think about it, actually better yet, I'm going to do it like this. I'll show that in a second. Still always in long, but 43 is a reminder that something is not quite right for the bulls. Traders are buying and scaling in, but the more they start scaling in, the less they're going to start buying high. I just created a slide. I'm going to share it in a second when it loads on this computer. So possible measuring gap. this rectangle, these lows, and these lows. The measuring gap in here, probably going to go a little bit higher. The bears need to close this gap though. 44, you can see the bulls that bought the 42 closed, disappointed with 43. And what do they do on 44? A lot of them got out at the 42 close. So traders, they buy the 42 close here, they buy more lower, and then they get out at the 42 close. Okay, question someone asked on the GoToWebinar question box. Bar 20 is a tight channel up. No leg down, no second leg down from 18 and 19. Yeah, so it's possibly a second leg trap. I'll talk about that in just a second. And that is, in this case, it trapped the bears into selling the bottom of a trading range. And since we're on that topic, because I was going to talk about second leg traps, so I'm going to go ahead and I'll answer more questions here in a second, but let me pull up the PowerPoint slides. Still no sign of a top yet, and with that open gap that I showed, the blue box on my screen, which I'll turn my screen back on in a second, that increases the risk of higher prices. So here's today, and what's interesting is this is the open we've had today. We had a rally, so basically leg one here, and then a strong breakout in the second leg. Whenever you get a strong second leg, and you possibly had a first, so leg one, pullback, leg two, you always have to be worried about the chance of a second leg trap. And typically, whenever you get a second leg trap, which this rally is the second leg, in other words, this blue box right here is a potential second leg trap. Whenever you get a second leg trap, it's pretty common for the market to have a very deep pullback, and especially if the market's in a possible trading range, test the bottom of the breakout. Here, you can see it tested it looks like to the tick. Let me check my other computer. So it looks like the market never went below. And nope, okay, it did. So it went one tick below this bar right here. So this sell-off went one tick below and found buyers. So whenever you have a trading range, this is one thing that's just really disappointing for traders. Traders inevitably, they buy up here, put their stop below here. They get stopped out to the tick only to watch it go all the way back up. And the reason for that is it's just really common for the market to test the bottom here. It's really common for the market to fall below breakouts, find buyers, and reverse. This is also a possible second leg trap. Leg one, pullback, leg two, as the person mentioned in the GoToWebinar. And typically when you get second leg traps, there's usually sellers above the high of the second leg. In this case, there's not sellers. The bears are trapped. So that is partially what's going on here. It'll be interesting to see what happens. My concern is the blue box. We've broken out above the top of the trading range and we're forming a gap. So to me, there's added risk of an upside breakout. I still believe what I mentioned though regarding the 15-minute chart. If you're a bull and we haven't touched the moving average in 41 bars. We have a high one buy. So some bulls buy the close, disappointed on this bar, the prior bar, and they look to get out back to the high close. And yeah, but the prior bar is a high one buy. And you have to ask, do you really want to buy above a doji bar like this? Probably not. So to me, I think we're going sideways and probably going to get to the moving average soon. Certainly this moving average, and I think we're going to try and pull back. So this gap will probably close. So what do you do here? I think it's it's a second entry buy. It's a tight bull channel. I think it's okay for bears to exit below, for bulls to exit below 46, but probably buyers not far below 46. The bears need to get more signs of strength. They need to start by closing the gap, which is the blue box. They need to close under the blue box. Next, they need to start to get bigger bear bars, and stop entry bears need to start making money. Until then, it's going to be difficult, just like that. We have a bull inside bar. Until the bears start to do more, the odds are we're going to go sideways to up. So to me, I think it's a problem that the traders are not getting that gaps are staying open. Still nothing to do here. Tight trading range, and it's easy to get hopeful and do something you shouldn't do. So to me, I would just sit back, make lunch, do anything. But the reality is we're in a tight trading range, and while we might get a downside breakout, we might get an upside breakout. We'll probably break out at some point. We have not yet, and it's better just to be patient. Bears trying to close the gap, which is the blue box. It's good if the bears can get below it. That's a sign of strength, but really the bears need to close below the blue box. That would be a stronger sign of strength. We could sell off pretty quick if everyone agrees that we're in a trading range, and that is in part what is going on here. Well, here you go. Everybody's giving up, and that is just the pain of the small pullback trends within a trading range. When everybody decides that the market might break to the downside, it can happen really quick. So we have a breakout. That's good. But what about follow through? This bar, we've closed the gap, so we're probably not in a small pullback trend. Good for the bears. What about getting a strong bear close? Remember what I said about the 15-minute chart. We could sell off quickly back down to this area. Now, this channel up's still tight, that there's probably going to be still buyers below. But even if we go to a new high, the important thing that just happened is bears made money selling below a bar. So bears were able to sell below 49 and scalp out. And that is a sign of strength. Not exactly what you want to see if you're a bear, but this reduces the chances we're still in a small pullback trend. So it's a trend line break, and even if we go to a new high, it will increase the chances that the bears might be able to develop more selling pressure. So a little bit tricky here. Do you buy above 50 if it goes above? Do you buy above 50 if the current bar goes above 50? You can, but I don't know. I'm a little bit suspicious of it. 50 went pretty far below 49. And if I'm a bull and I bought the 49 low or the 48 low, and I had to sit through a pullback on 50, I'm probably sufficiently disappointed, which means there might be more sellers at the 48 low and the 49 low than buyers. But still, no closes below the moving average, and the bears need to get closes below the moving average. This is what I was talking about. 40-50 might be a strong enough bar that there'd be sellers for a second leg down. So think about it this way. Bulls bought the 48 low or the 49 low, and they're disappointed with 50. 50 went further down than it should have. And because of that, it's probably going to get a second leg. So the bulls that buy the 48 low or the 49 low, scaling lower on 50, are going to exit back at their original entry, which is the 49 or the 48 lows. The bears, they see this and they think, 50 went down pretty far. Maybe it'll at least have a small second leg. So if I sell back at this area here, it will probably go down enough for a scalp. 51's a low one short, but 50 is a bad breakout. Broke to the downside and reversed up. So there's probably more buyers below 51 than sellers. So the low probability event would be a strong bear breakout like 34. So something like this closing down here. I would not rule this out though for the bears. The bears can still get a strong breakout, but not clear yet. So to me, the market's deciding, are we going to fall below this trading range area, the 12 high, one of these highs, and get back in this area? So I still think yesterday's high is the magnet. It's possible. You do have to wonder. I'm going to go ahead and mark it just so we don't forget it, but the 19 close is another magnet. And right now, we probably won't reach the 19 close, but the more bear bars that get added here, the higher the probability will increase that we will reach the 19 close. So now we have 4 bear bars, and where are the bulls? The bulls are starting to lose control. They haven't given up yet, but if this is the trading range, like I said, we could fall pretty quickly. Even the 15-minute chart on the left right here, the moving average is about 70, so 4170, which is all the way down here. So we could easily fall to 4170. But right now, the bears need to do more. Bears trying to get the downside breakout. So again, I think the first target is yesterday's high and then possibly the 19 close. Why the 19 close? Because if you're a bear, it was reasonable to sell the 19 close. And whenever you do something reasonable, typically the market will get a second leg. It's possible you would just form a higher low. So the bears sell, they scale in, and they get out break even down here. But this is getting a little bit dangerous for the bulls. 1, 2, 3, 4, 5, possibly 6 consecutive bear bars, small tails in a micro channel. So this might be an endless pullback. Well, how about the bears? They had a chance, and I mentioned around 52 and 53, 54 that the bears needed the downside breakout. And they were doing a good job, but ultimately, market formed 2 legs down, and 54 reversed up, and it's basically a wedge, 43, 50, 54. And why do I have this red line drawn of 12 high? It's more or less to serve as a reminder that we had a lot of trading range price action. We broke above it. We pulled back, broke above it, tried to pull back again. To me, 54, 55, strong enough. We're probably going to go at least a little bit higher. But 49 to 54 is good for the bears. It at least created selling pressure. But the bears could not do enough with it. So to me, 54, 55, probably strong enough for at least a small second leg up. When you look at 55, to me, it looks like a surprise. And because it looks like a surprise, that makes me think that the market is going to go a little bit higher. Now, the bulls need to get follow through. And if the market starts to stall and hesitate, we could easily collapse down to the 54 high. There were bears that sold the 54 high, and they are trapped on 55. And if the market doesn't sell off quickly, a lot of those bears may start buying back shorts. With it being late in the day, not late in the day, but with 2 hours left in the day, and with today being Friday and the end of a month, you got to wonder if we're going to get some sort of strong rally into the close. 4,200, pretty far away. What if we get a measured move? It's possible, but to me, I think the bears need to do more. We're 1.5 minute We're a minute and 30 seconds into this close, or a minute and 40 at this point, and we have not triggered the buy. So there's not a lot of urgency yet. The bears are also trying to prevent the prior bar from triggering. But to me, 54.55 strong enough for at least a small second leg up. And if this bar is a bear bar, there's probably buyers below. It's similar to yesterday on the daily chart. You get a strong bull bar, and bulls will do one of two things. They'll buy the close knowing that even if the next bar is a bear bar, closing below its midpoint or on its low, that there's probably going to be buyers below, so they'll buy. And if they're lucky, the next bar will be a big bull bar. So traders here, they see a big bull bar. Even if the next bar is a bear doji bar, there's probably buyers below for a second leg. And if the bulls are lucky, we'll get another big bull bar. But you can see the market is hesitating, and it's hesitating because of all the sideways trading we've had through here. So you can also argue we have a wedge bottom, 43.50.54, and a test of the 39 low. So far, bulls are not getting what they need. But that does not mean we're going to reverse the breakout. We will probably get at least a small second leg up. But the bears are doing a good job in disappointing the bulls. So some of these bulls that bought the close of the prior bar and are scaling in lower, they will be disappointed enough that they will be more interested in taking profits back at the prior bar close. So if the pullback is too deep, more and more traders will scalp out. But it's certainly disappointing if you're a bull. This is not what you want to see. But it's certainly disappointing if you're a bull. This is not what you want to see. For the bears, it's a double top. You can call it a major trend reversal. But I think 54 and 55 are strong enough that we'll probably get at least a small second leg up. Some traders that bought the 55 close will be disappointed with 56, and they will look to exit back at the 55 close. Well, and then you can see traders are possibly giving up here. The bears still need to get a strong breakout here. Otherwise, the market may still have to test the 55 close. Testing the breakout point of the 54 high. So the bears that sold the 54 high and scaled in are able to make money or avoid a loss. That is a sign of increasing bearish strength. So that is good for the bears. Probably going to go sideways here. Big rally, 54, 55, big sell-off, 56, 57. The bears might be able to reverse 54, 55, but I don't know. Maybe if they get a if this bar closes on its low. But right now, I think traders are better off waiting for this bar to close. Trapping bulls that bought above 54 or the 55 close. And it didn't even allow the bulls out who bought the 55 close. Tail on 57, but 56, 57, probably strong enough for at least a small second leg down. Is it always in short? It might be, but when in doubt, in general, the bulls probably need one more bar. If the bulls are lucky, they'll get a measured move down, which you could say from the 56 high, 54 low, which takes you pretty much to yesterday's high. So to me, this increases the chances that we're going down to yesterday's high. So 57, big enough bar, probably at least a small second leg down. And for that reason, it's probably always in short. What do you do if this bar closes on its high? Well, if it looks like If it looks like 27, that'd be a problem for the bears. But still, probably a pullback that'll get at least a small second leg down or sideways. So, bears trying to get a second leg down. Some bulls bought the 56 close or the 56 low. They may use this bounce trying to get out break even. Bulls are hopeful it's a double bottom of 54 and the low of 57, but to me, 56, 57 is strong enough that we may get at least a small second leg down. But this current bar is damaging for the bears. Possible 20 gap bar buy, but I suspect the bulls that bought the close at 55 or below 56 are sufficiently disappointed and they may use this rally to try and exit. Good bar for the bears. Good bar for the bulls, 58, but testing the 56 low. So for the bears, they see it as a pullback and they want a second leg down. But just like the bulls were disappointed buying the close of 55, the bears are disappointed selling the close of 57. So we may start to go sideways here. You can see the low of 56 is 82.50 and the high of this bar is 82.50. So sellers back at the 56 low. Bears still trying to get a second leg down from 57. So I still think 58, from what it looks right now, 58 was a pullback. That's why I said there might be more sellers above 58 than buyers. It was retesting the 56 low, the breakout point. Now the bears need to get a breakout below 58 and 57. Otherwise, there's probably going to be buyers below 58 and 57. So to me, the market's deciding if we're going to get down to the yesterday's high, the blue line. Disappointing close for the bears. They still want to break out below the 59 or 57 low and really below 54, but tight trading range. Still not over for the bears. But the prior bar is fairly disappointing for the bears. You can see some bulls that bought the close of 55 bought more at the low of 55 and they used 58 to get out break even. I still think we're probably going to try and test lower. To me, the bulls should not have allowed a strong bar like 55 to sell off this much. Now the bears, just as the bulls got disappointed up here, the bears need to get a breakout below and they need to prevent the market from turning up, creating another buy signal bar. Another way to look at this is 54 and 55. 55 is a strong enough bull bar. It should have had a second leg up. So when you see the pullback here on 56, there were probably more buyers. There should have been more buyers below 56 than sellers. And this bar here trapped those bulls. So a lot of those bulls, some of them bought below 56 or they bought the midpoint of 55. So somewhere around 82 even. And they used this rally here to try and sell out of longs. The bears know that, and the bears started selling on the way up, betting on trap traders. Still no strong breakout yet, so it's not all that clear. And the market it could be waiting for the final few minutes of the bar or the final minute of the bar to decide what to do. Is it going to close on its low, or is it going to reverse up? Still, the bears still trying to get a downside breakout. Bad buy signal bar on 60. And so far, we have not gone above it. For the bears, they see a micro channel since 56. And they're trying to get the downside breakout here. Again, I still think, to me, the bulls had their chance. They tried for a while to get an upside breakout. And 55, to me, the bulls should have gotten higher prices after 55. They should not have allowed 55 to completely reverse like it did. And to me, that increases the chances that the market is going to try and test lower. But just as the bulls should not have allowed the breakout to fail on 55, the bears have a chance at a double top, which is the high of 55, low of 54. They need to get a downside breakout below it. Bears just not doing enough. So probably going to go more sideways here. Disappointing bar. So probably going to go more sideways. Bears trying to get the downside breakout. Forming a tight channel. Good for the bears. Weak signal bars or tails below the past 3 bars. That's disappointing, but it's still a fairly tight channel. So this could still lead to a measured move down to yesterday's high. Bears trying hard to get the breakout. Another good bar for the bears, but tail. But now we have 5 consecutive bear bars. Probably going to go at least a little bit lower. I know I'm behind on some of the questions. I will answer them. And I have to be honest, I'm pretty tired. Just as I said, I didn't sleep well, so it's a little more difficult to focus and answer questions right now, but I will get through them. I may just have to answer a lot more of them at the end of the day than throughout the day. But feel free to just keep asking questions and I'll just check them off one by one. So getting the bear breakout, and the bears, the bulls had their chance, as I said, with 55, and they got trapped on 57. 58 rallied. A lot of those bulls got out. The bulls should have gotten a second leg up, and they didn't. So there should have been buyers below, and they got trapped. And a lot of those bulls started buying back shorts. Now look what's happening right here. So traders buying as the market's going down. That is a problem for the bulls or for the bears. You know, if this, to me, it's looking more like a leg in a trading range, more so than a bear trend. But tight bear channel, first look probably will fail. But, you know, you really don't want to see that if you're a bear. If you sold the close of 63, 62, you're probably fairly disappointed with that bar. So that bar is certainly a little bit of a surprise. Probably the first reversal up will fail, but you know, I have to say, you really, if you're a bear, that bar is bouncing quite a bit, and that may shake some of the bears out. Bulls still unable to get a bar closing on its high. And it looks like traders that were buying ended up scalping out, and the bears sold aggressively as the market rallied on this current bar. Even though there's lots of tails below and the bears are not getting consecutive bear bars, the channel down is tight. And when the channel down is tight, it's a breakout on a higher time frame. Some of that buying could have been due to testing the 15-minute chart. 10-minute chart, you can see two decent-sized bear bars. Another bear bar on 63. Big tail above, tail below, but it is now 5 consecutive bull bars. And probably going to go at least a little bit lower. And what do you do if this bar closes as an inside bar on its high? It's reasonable to exit shorts. But again, I suspect with the channel down being as tight as it is, the first reversal up will probably fail. And that's what I was talking about. Traders sold as the bar went up. 64, 65 a bull bar, probably buyers below. Tight bear channel, but looks more like a leg in a trading range than a bear trend, which means there's probably buyers scaling in lower. So I think we're going to bounce. That's what I was talking about. The bulls, the market is reversing, and 66, the current bar, is probably strong enough that it'll probably have at least a small second leg up. But it needs to close on its high. Tight bear channel since 56, so there will be some traders selling and scaling in higher. Again, if I've not answered your question, stick around for the end of the day review because I will answer all of them. Someone's asking about, do I see a ledge? And you could argue there's 3 equal highs, and that's a ledge, but I wouldn't think too much of it. To me, the bears, they tried to get a sell-off to yesterday's high, and they couldn't do it. And because of that, the market is failing and reversing back up. So we could still test the highs, but it's important to see what kind of bar we get here. So to me, 66, 67 is, we're testing back to the 56 low, where the bulls over here, who thought there'd be a second leg up, bought. So that might be somewhat of a resistance level, the 56 low right here. But so far, pretty good reversal. Bulls trying to get the upside breakout. Probably back to always in long, assuming this bar closes on its high. So reasonable to buy the close of 67. Stop probably below 66 or maybe a measure move down of 67. At a minimum, probably going to get to the 56 low and probably get above the high of the day. The sell-off from this sell-off just was not strong enough. Too many tails below, lacking consecutive strong bear bars, and traders bought it. There's probably close to a 50% pullback. Not quite. So far, this is looking good for the bulls. Take a look at some questions. Would you consider a negative gap measured move with 25 to the upside? So would I consider a negative gap here? Yeah, you could argue that's a negative gap. And it led to a measured move from here to here on the way up. 68, a bull bar. Now we have 4 consecutive bull bars. Micro channel since 64. So probably more buyers around this area. So buy the close, reasonable to put a stop, maybe a measured move down from 68. So in other words, putting a stop. You can buy the close, put a stop somewhere down here. If this is going to be a buy the close rally, we probably will not fall to this area. Okay, question: when you're trading during the regular trading hours, which is the ES.D, which is this chart, the day only session, do you use only RTH charts, or is it helpful to look at the ETH, which is extended trading hours, or Globex hours? Yeah, for me, I just look at one chart. So this is pretty much all I look at. And, I don't really give the Globex market all that much thought. So for me, this is what you're seeing is exactly what I'm looking at. Testing the 56 low, so some profit taking. Like I said, some bulls bought the 56 low expecting a second leg up, and they were disappointed with the sell-off. And some of them selling out of longs here. The channel up so tight that we will probably go at least a little bit higher. Has my opinion changed? Not really. I still think we're going to try and get to the high of the day. Therefore, there's probably buyers below and on any pullback. $70, big bar, so climactic. So some traders buying and scaling in lower. Still probably sideways here. And the first reversal down will probably fail. A little bit of a surprise on 71. So that will probably limit the upside and probably going to go more sideways. Getting late in the day, so probably not going that much higher. When it's late in the day and you get a buy the close rally, most traders are pretty quick to get out, a point or two below a bar like 70, because the risk is you could sell off really quick back to the 64 low. So in a buy the close market, with it being pretty much around bar 72, I would get out of longs here. I think there's just too much risk of a fast sell-off. It happened frequently enough where you get a buy the close rally that begins a little too early, and in 1 or 2 bars you could get all the way back down here. So you don't want to be buying and scaling in and then get a plunge down. So to me, 71 is a big enough bear bar that it'll probably get at least a small second leg down, which means the first reversal up will probably fail. I think probably better just to be flat. And again, I will answer all the questions. And certainly, worst case, I'll answer them at the end of the day. But the questions are time-stamped, so I'll understand the context as well. So just stick around, and I'll answer them. And I'll begin the end-of-day review here in about 25 minutes. So a bull bar, but following a lot of bear bars, probably going more sideways here. I think it's really hard to do much of anything. There's just not a lot of time left in the day. So most traders better off being flat. You can see the market rallied back to the midpoint of bar 71 and sold off. Some bulls bought the close of 70, scaled in lower, getting out at around the midpoint. Where, and this was asked at 1:40 Central Time, where would be a good place to sell here, bar 59? So they were asking over here, and in general, I like to try and answer the questions as my goal is to answer more questions as the day progresses and kind of when they get asked, but it's just today really hard. It's just more difficult to focus today, just more tired than usual. So that's why I saved until the end. But where would it be a good place to sell here? Bar 59. I thought bar 59, there's two things that was interesting about bar 59. One is what I mentioned here. Bull breakout, should have gotten a second leg up, and there should have been buyers below. But then 57, there were not buyers below. There were sellers, and so those bulls got trapped. And that's why I thought we would get at least a small second leg down. And 59 is a tricky bar. It's a bad stop entry short, and it's also a bad stop entry buy. And this is for another conversation, and I do want to at some point maybe do a longer session over breakouts and second legs. But breakouts typically get symmetry to some degree. So 56, 57 should get some sort of second leg down. And one way to look at it is here we had a sell-off, a pullback. Maybe we'll sell off to somewhere around here. And you can see we touched it and pulled back. But either way, 58, 59 is a confusing bar. It's a confusing picture of the day because they're really, so you can sell the close, taking a chance we go down. In general, better to wait for bear bars closing on their lows, and we're not getting it. They tried on 62, and they couldn't do it. Same thing with 63, and then eventually we got all these tails and reversed up. But, I think it's okay to sell 59, 60, just take a plunge and hope that it sells off. And when it starts to stall, you just get out. Okay, this was a question asked around 11. And we're going to go sideways for the rest of the day, most likely. So for me, I'm not doing anything else. So this was asked at 11:55 a.m. So right here. Trying to make sense of bar 13 to 14 and bar 18 to 19 within the context of a broader move. So they're trying to make sense of bars 13 to 14 and then 18 to 19. Yeah, it's a second leg trap. So remember this slide? Matter of fact, let's just build, even though I hate to do it because that pointer got captured and that's going to really bug me. But second leg traps are, let's do this. And again, I challenge everybody to try and make slides. It can be really helpful. So here's a second leg trap bear. And what I often do is I just make a note at the bottom, /28, 5 minutes. So it just gives me a reference. But the way I see it is this. Leg 2. Here's leg 1. This will just take 1 second. But anyways, we had a sell-off, pullback, and a strong sell-off. And whenever you look to the left, whenever you see a bear breakout and you look to the left and there are bars to the left, in other words, it's a high or low, you never know if it's going to be a high or low and lead to a rally. And whenever you get a strong sell-off in a trading range, you always have to wonder if it's a second leg trap. Here's an example. This is what Al talked about earlier. This was on the Globex session on April the 24th on a 15-minute chart. We had a big bear bar and weak follow through to the downside and then a sharp reversal up. And this is similar to the 5 minute over here. Strong breakout, deep pullback, and then a sell-off, but the sell-off was weak and there were bars to the left. And it ended up being a higher low. Still interesting. We're trying really hard to close on the high, and we just might do it. And even when you see a rally like 70 and you get a pullback to 74, usually the bulls that buy the 70 close and buy more lower are able to make money. But this is pretty impressive. So that is 18 and 19 is a second leg trap. And it's common for the market on a second leg trap to rally all the way to the highs. Typically, when you get a second leg trap, it goes sideways. So just trying to find an easy example. That's obviously today. Here's an example similar to a second leg trap. So we had a sell-off, pullback, and then a strong sell-off here. And it's very common whenever you get a strong leg down, you get a pullback and the market goes sideways. Sometimes the second leg trap can go all the way to the highs. Okay, this was asked at 11:55 as well, right here. They said, in my opinion, the most difficult part of the day. Here, I'll do it like this, and I'll just point to where it is. 11:55 is bar 41. They said, in my opinion, the most difficult part of the day was expecting a second leg down after 18 and 19. Yeah, that's because typically you get a second leg down after 18 and 19. And there's this chart, actually, it happened late last year, I think it happened early this year. Let me find it real quick. Here's a version of another second leg. Sell off, pull back, strong second leg down, but it tested a big bull bar. Here it is. So this was an example where, one second. Here's an example where we had a gap up on bar 1 and follow through bar 1 and a strong sell off on these two bars. But it's a big up, big down. And instead of getting a second leg down, which we should have gotten the second leg down from here and here. And instead, we got a lower high. And instead of getting a lower high and a second leg down, we got an endless pullback. And it led to a very strong small pullback trend. So that is understandable. And that happens. And that's kind of what happened on 18 and 19. Just we ended up going a lot more sideways. And you can argue, though, let's see, if you're a bear and you sold 19 and you sold more below a bear bar, like 49, it came really close to allowing you out at break even. So yeah, I agree. Big sell-offs, when you see a big sell-off, especially when it's a second leg and it's a possible higher low, you always have to be concerned that it could be a trap, trapping bears into selling too low. Okay, give me just a couple of minutes here and I will be right back. The end of day review, it's probably going to be a little longer than usual, but what I will say is these are recorded, so you can always go to the Brooks Price Action website and pull the recording when it's released. Okay, I'll be back in just a few. So I'm going to start the review and then I'll go back to answering the questions. Overall, pretty good day for the bulls. Daily chart, we have completely undone all the damage that was caused from April the 18th to 3 days ago, which was April the 26th. This is a strong enough rally over the past 2 days that we are probably going to get at least a second leg up. So by the close and probably going higher, probably going to try and get to the February second high over the next week or two. And we have a measured move projection up to 4,300. And I mentioned that it's the low of March 13th to the high of March 22nd. Takes you all the way up to here. And to me, this increases the risk that it's a measuring gap. So a measuring gap from the high of March 22nd to the low of March 26th, which takes you all the way up to here. So projection. Just want to make a note of that. So to me, this is certainly a problem for the bears. Any bear that sold 2 days ago and didn't get out yesterday is taking a lot of pain, and the first reversal down is probably going to fail, which means there's probably buyers on the first pullback. Monthly chart, we went from being at the open of the day to open of the month, going pretty much above it in a matter of 2 days. Really small month, might be the smallest month in ever since maybe for the past couple of years. But so far, that is a pretty good close for the bulls. And we'll probably go at least a little bit higher. February 2nd, only a little bit higher. So at a minimum, I suspect we'll probably get to the February 2nd high. On the weekly chart, almost an outside up week. Last week's high was 94.75. This week was 93.75. So we came within a point. But obviously buyers below and bulls bought aggressively. So first bar of the day, it's a big bar closing on its high, following a gap down, and probably, it's reasonable to buy the close. Is it the low of the day? Probably not. Probably buyers below. And probably buyers on the close, buyers below, but we could easily fall below 1 and reverse up. So if you're buying 1, I think it's better. Most traders should probably wait for consecutive bull closes. 2 consecutive bull bars, probably always in long. Failed breakout below 79. So you have to wonder if we're going to get up to the 79 close. We broke below 79, we'll probably get back above it. And then a hesitation bar on 3. Always in long, 1 and 2, probably going to go at least higher and get a second leg up. So buyers below 2, buyers on the close of 3, betting on a little bit higher, and then 4 and 5 consecutive bull bars. 5's an inside bar, and it's an okay buy, but it's an inside bar, so that's a warning. It's trading range price action. The channel up is still tight, so that increases the odds that the market is probably going to go more sideways. It's a tight channel, so you'll probably get an upside breakout. 6, a pullback, testing the high of 2 and 3. Do bears get out? Do bulls get out below 6? Bears sell? I don't know. I think with the channel being up as tight as it is, I think that even if traders get out, they probably buy again above a bull bar. So to me, if you get out below 6, you probably have to buy again above a bull bar. The one thing we know on the open is because of how climactic yesterday was, Thursday, today is probably going to have at least 2 hours of sideways trading. And as you know, 50% chance that we get follow through buying on the open before the trading range begins. And then 7, outside up bar, possible parabolic wedge, 2, 4, and 7. But parabolic wedges in tight channels are minor. Most parabolic wedges are minor. And it's similar to yesterday. So we had a wedge, 3, 6, and 9. 3 pushes up, big bar on 9. Today, we have a breakout. Let me fix the chart here. And same thing on 7. So 2, 4, and 7 is a wedge. So if 8 is a bear bar closing on its low, I think it's reasonable to exit. And instead, 8's a big bull bar. So now we have consecutive bull bars, 7 and 8, breaking above bar 77, 79 yesterday, probably by the close and going higher, but fairly climactic. So we may not go all that much higher, but at the moment, there's no reason I would sell. I think better to wait to better to either buy pullbacks or wait, and better to buy the close or buy pullbacks. Too early to sell. 9, 3 consecutive bull bars. Probably buyers below 9, buyers at the midpoint of 8. But to me, this is getting parabolic and climactic and not sustainable. And still 75% chance we're going to get a trading range forming that lasts for 2 hours beginning before the end of the second hour, which is bar 24. And then 18, bull bar closing on its high. Best looking body of the rally. So you have to wonder if it's a possible second leg trap. And with all the buying yesterday, you have to wonder if this is going to lead to an early high of the day and go mostly sideways. 19, a bull bar. Smaller body, bigger tail, so some increasing selling pressure, but still probably by the close and going a little bit higher. And then 12, smaller body. To me, this is getting extreme. And whenever you get a micro channel that lasts for 6 bars and it's a fairly parabolic move, you know that the market's probably going to pull back on any bar, and the pullback could be deeper than you want. So you always have to wonder. And the other thing is on the open, there's a higher risk of a major reversal. In general, 50% chance that you get a major reversal from whatever initial rally. 70% chance that there's an 80% chance that there's a minor reversal. So 80% chance we at least get a minor reversal lasting a few bars. 50% chance we get a major reversal lasting several bars. 13, breakout below 12. It's a warning that the market's developing or forming a trading range. The bottom of the range may not be that far, but if it's forming a trading range, we will probably begin to go sideways fairly soon. And then 14, bears giving up. All of the traders that sold anywhere in here and scaled in were able to avoid a loss or make money. 14, to me, 13 and 14 are big enough that the market's probably going to have at least a small second leg. Therefore, it's probably sell the close and going at least a little bit lower. But if you're selling, the pullback could be deep. So better if you can sell more above bars like 14. So if you're selling, to me, the stop at a minimum is above 12, and probably better if you can put it above 12. 15, high one buy. But high one buys, as I've said several times, are reasonable in strong breakouts. And to me, this is not a strong breakout. This looks like a trading range. We rallied and sold off below the breakout point. So we're probably either in a channel or the early stages of forming a trading range. So there might be more sellers above 15 than buyers. 16, strong bull bar going above 14. That's what I warned about. If you're selling the close at 14, it's probably a mistake to exit at the 14 high. In fact, there's probably more sellers at the 14 high. So that makes it a more dangerous trade. And then 16 or 17, small bull bar, but 3 consecutive bull bars, probably buyers below and going at least a little bit higher. You'll have some bears who sold the high of 15, betting on a second leg down after 13 and 14. And those bears are disappointed who sold the high of 15. They're disappointed after their entry bar, which is 16. So you will have bears looking to buy back shorts at the 15 high. So a lot of traders, what they do, trying to find an easy example, but let's take, it's not a good example, but it's at least a close enough example. We have a high one buy on 3, so it's a rally and a pullback, which means buying above 3 is buying above a high 1. Generally speaking, most high 1s lead to hesitation in a second leg. And an easier way to think about that is most pullbacks form a high 2 or a high 3. Most pullbacks last more than a high 1. So that means there's probably more sellers. Let's say there's sellers above 3. They get trapped on 4 and they see follow through on 5. So therefore, the bears that sold the 3 high are wrong. As Al would say, they're disappointed. And if they're disappointed, they want to get out of the trade. So the bears, they sell the 3 high, they scale in higher, and what are they going to do at the high of 3? They're going to look to exit around the high of 3. So what that means is there's going to be buyers on a pullback around the 3 high, which is what happened below 6. If you're a bull and you didn't buy the high 1 and then you see the high 1 worked, what are you going to do? You're going to buy a pullback of the 3 high. And that's what happened over here. So some traders, you'll have some bears who sold the 15 high, scaled in higher above 14, and they're deciding what to do here. Do they exit at the 15 high, or do they hold, betting on a larger second leg down? Because of the sell-off 13 and 14, the second leg down could be a lot bigger than what seems reasonable. And then 18, very big surprise bar. Probably sell the close going at least a little bit lower, but it's a big bar and a climactic bar, and that increases the risk of a deeper pullback. So this is a possible second leg trap. And as long as the bears can hold, as long as the bulls can hold above 1, they will buy aggressively, trying to form a higher low. In 19, another bear bar, but tail on 18, tail on 19, big tail on 14. So I suspect that any bull who bought the 16 low, 15 low, or 14 low, it was reasonable to buy these lows. In other words, when you see these bars, there's probably buyers somewhere below, and the market's going to go sideways. And the bulls got trapped buying anywhere on 18, and they got followed through on 19. But the reality is, a lot of those bears, they'll just say, yeah, whatever, it's a trading range day, and as long as we stay above 1 or we don't get a measured move, worst case, we maybe go down here, but we're probably going to go sideways. So a lot of those traders will buy aggressively on the way down, betting on trading range price action. And that's what happened on 20. 20 is a strong enough reversal that it's in essence the second entry buy. First entry was 15, which is a high 1, and then 20 is the second entry, which is a high 2. And you have to remember, on some time frame, 20 is a bull bar closing on its high, so it's a reversal. You can call it a 2-bar reversal. And let's see, maybe on a 10-minute chart, let's just see what a 10-minute chart would look like. So here's a 10-minute chart, and you can see bar 1, it's a bad looking high 1. We sold off here, and then 10-10, which is the close of the 5-minute bar that we're discussing, is a bull bar closing on its high. So traders will buy above it, stop below, or stop below here, betting on at least a trading range or bull trend. And then 21, a doji, probably buyers below 21, scaling in lower. 21, probably buyers below, scaling in lower, betting on a second leg up. And so 21 is a pullback. You have a breakout on 20, doji, 21. So traders will see it as a pullback. Whenever you have a pullback bar and you look at it and you say, yeah, I'd really love to buy below a bar like 21, that's probably going to lead to a second leg. If it's too obvious, then a lot of traders will just buy the close. So they see, in other words, an easier way to say that is whenever you have a stop entry that's just a really obvious bad stop entry, traders will often just hit sell the market. So let's find an example. It's kind of the same thing as, it's hard to see, but 57 to yesterday. It's a bull bar, but it's a bad stop entry short, and everybody suspected it was going to go above the bar, go above the high of 57. So on the close of 57, everybody just hit buy the market. 22, we have a bull bar closing on its high. It's a reasonable buy the close bar, and it's a reversal, probably going to try and retest the 11 low. But with 3 consecutive bull bars, probably buy the close and going at least a little bit higher. 24, we have a, 24, we have a bear bar, but it's a 5-bar micro channel, probably buy the close and going at least a little bit higher. Let me adjust something on this microphone. For some reason, the gain is automatically adjusting. 23, bear bar, but probably buyers below. And then 24, another bull bar, but I mentioned this is a tight enough channel, probably going to get a second leg up. It was reasonable to buy the 19 low, and because of that, you will have traders who buy the 19 low and scale in lower, and the reality is the 19 low is a magnet, so if this is a trading range, we'll probably get back to the 19 low, which is what happened here. 24, enough of a surprise, probably going to go at least a little bit higher, but you're getting in the area where bulls got trapped. Bulls bought the 19 low, scaled in lower, and on 25, they may use the rally to sell out of remaining longs, which could cause the market to sell off. And that's what happened on 26. 26, bear bar closing on its low, but tight bull channel up to from 19, probably buyers below 26 scaling in lower. The bears have not made money since selling below 18 or the 18 close, and it's possible 26 is a retest of the 24 and 23 highs. So it's a retest of a breakout point. Bears sell the 23 high, they sell the 24 high, and then they see a bar like 25. They're disappointed. What are they going to do back at their original entry? So if they sold the 24 high and they scaled in more on 25, they may use the pullback on 26 to try and reduce their loss or exit at their first entry. And that's what happened on 27. 26 retested the close of 24. 24 is it's a tight trading range. You can argue it's an expanding triangle. You can argue that it's a triangle. It doesn't really matter. Whenever you get inside bars, and it's almost an inside bar. The high went just barely above the prior high. But whenever you get small bars that are contracting, it's a magnet for the market. So when you're in a tight channel, the market can often test that area and then bounce. 28, strong bull close, probably going at least a little bit higher, but possible parabolic wedge, 22, 25, and then 28. So probably buy the close, but you're getting late in the range, and that will increase the chances of a deeper pullback. Give me just 1 second. 28, another bear bar, but still fairly tight channel. Since I mentioned the sell-off to 19 may be a second leg trap, and because of that, the market may have a fairly deep pullback, and it could easily rally above the 17 high and go sideways. What about selling below 29? I would not. Too tight of a channel, probably buyers below scaling and lower. And 30, another outside bar. So it's parabolic, but we're getting open gaps. High of 24, low of 27, high of 25, low of 30. So there's an open gap in this area. 31, bear bar, but tight bull channel. At some point, we're going to pull back, but I suspect the pullback is going to be fairly minor and probably going to go mostly sideways. 32, a bull bar, trying to break above all the bars to the left, and it is, but we're rallying, pulling back, rally, pull back, rally, pull back, another rally, and we pulled back entry bar. So to me, I think probably going sideways here. Because it's a second leg trap, as I mentioned over here, we basically have a second leg trap, leg one, leg two. It's very common to test the highs and then go sideways for several bars. So if you're looking to sell the highs of a second leg trap, usually you can wait. In other words, I wouldn't just sell with a limit order at the highs, betting that we test back down to the 18 close. Give me 2 seconds. 33, an inside bar. Still tight bull channel, so probably buyers below scaling and lower. 34 was a surprise, and it led to a second leg down. But the second leg down formed a higher low. When you get a surprise like 34, it increases the chances that there's sellers above 35 and 36. So it's a tight bull channel, but it's forming a tight trading range, and that will increase the chances that there's sellers above and buyers below. And you can see we got a new high above 32, and we immediately sold off. So the bears sold the high 35, scaled in higher, and they made money on 37. So this is starting to develop into what looks like a trading range. 38, 39, bulls bought below 37, scaled in lower, 38, 39, and made money as 39 rallied. So tight trading range, sellers above, buyers below, and we're forming a tight trading range above the highs of earlier today. I still think we're going to try and sell off back to yesterday's highs, but with the market holding above the moving average, until the bears can clearly break below the moving average, probably going to go more sideways. And then 40 sold off and then rallied, and then here 41, 42 is where it started to cause a problem for the bulls, for the bears. Give me just 2 seconds. 42, decent bull bar, 4 consecutive bull bars. Some bulls will buy the close and scale in lower, but with all this trading range price action here, and especially here, I suspect that the bulls will be probably disappointed fairly soon. 42 is a climactic bar, and that will increase the chances of profit taking somewhere after the 42 close, and that's what happened on 43. 43 is also, I mentioned at the time, we had a fairly tight bull trend, tight channel on the 15-minute chart, and 43, which is 1205, I mentioned was probably going to test the moving average soon, and I thought the upside would be limited until we could do that, and that's what happened obviously later today. 44, bulls bought the close of 42, scaled in lower, getting out break even back at the 43, 42 close, and then we formed a tight trading range. But again, I thought we would have to sell off and get closer to the moving average. We came really close here on the 15-minute chart, and I suspect we'll probably test it once again. 48, the entry bar after a second entry buy, 47, but tight trading range. possible open gap here, but to me, this looks like it's possible. It is a small pullback trend, but it looks like it's going to evolve into a trading range rather soon. 49 bear bar, tight trading range, and call it a triangle. For me, 3 clear attempts up and possible wedge 12, 32, or 37, and then one of these highs. I would get out below any bear bar at this point. Too much risk that we're going to test the moving average at a minimum and the 15-minute moving average, which is somewhere down here. 50, surprise bear bar, but a pretty big tail. If you're a bull and you bought the 48 low or the 49 low and scaled in lower, you're disappointed with 50. And I suspect a lot of those traders will use any pullback to sell out of longs. 51 tested the 48 low and the 49 low. I mentioned the sell-off on 50 was strong enough for a second leg, so we'll probably try and test a little bit lower. But the tail on 50 is disappointing, which means there's probably buyers below scaling in lower. And then 52, 53, consecutive bear bars, but probably going to go a little bit lower, but still probably not going that much lower. And then 54 was a disappointing bar. Still a micro channel and a tight channel since the 49 high, so probably sellers above scaling and higher. And then 55 was a surprise. It's a bull bar in an always in market. It's probably buy the close on 55, and bulls will buy and scale in lower. But the problem here was it's a bear bar closing on its low, so you can call it a head and shoulders top, left shoulder, head, right shoulder, or you can just say it's a double top and a lower high major trend reversal. The bears will sell betting on at least 40% chance that we're going to test down to here. But after 54 and 55, we should get at least a small second leg up. And then obviously 57, we did not get a small second leg up, and that trapped any of the bulls who bought the close at 55 and a pullback. And the interesting thing about 55 was the bulls never had a chance. Try to make the bars bigger. The bulls never had a chance to buy the close at 55. They were disappointed, and they never had a chance to get out back at the 55 close. And then 58 is retesting the area where the bulls got trapped. So bulls, they bought the 56 low, they bought a 50% pullback at 55, and a lot of those bulls who bought and scaled in are trying to get out break even. You have bears who did not take the sell below 56, anticipating that there were buyers below 56, and a lot of those bears will use, try to make the chart look a little cleaner, a lot of those bears will use this bar to establish shorts back at the 56 low for a second leg down, and that's what happened on 57. Some bears sold to close at 57, disappointed on 58, and they bought back shorts on the retest of 59 when it retests the 57 low. 57 is a big enough bar, it's probably going to lead to a second leg down, and we have an obvious magnet below yesterday's high. So possible measured move target from the high of 54 to the low of the high of 55 to the low of 54. Reasonable to take that trade. So traders will sell, betting on a sell-off. Tight bear channel down to 62 and 63. But with all the tails below, I suspect there's more buyers below scaling in lower. Even though it's tight channel, there's a lot of overlapping bars, and that lowers the probability that the bears will get the breakout. It's also a 50% pullback. Now, what about buying just at the market? You can, but to me, the problem is we could easily collapse down to yesterday's high. So I think probably better to wait for signs of hesitation. And then 64, bodies getting smaller. Good for the bulls. Tight bear channel though, so first reversal up will probably fail. 65, we triggered the high. We triggered a sell above 64, and now we have a low one short below the 65 low. Low one short after some form of a wedge, 50, 54, maybe 64, testing any of these lows over here. You can see it's testing the breakout points here. So some bears sold anywhere over here, and think about it. Some of the bears They sold here, betting that it was close to this area. So this stop entry below 19 led to a big sell-off, and traders thought this would be resistance back at this area. We went below this bar and sold off pretty quick, so maybe if we retest it over here, we'll do the same thing. And instead we got a big bull bar, and that area will be a magnet later in the day. And you can see we went below it and we started to turn up. Surprise on 66. Is it by the close? It might be, but better to probably wait for consecutive bull bars. 66 is a big enough bar that there's probably buyers below scaling in lower, which means it's kind of like yesterday. Even if the next bar is a bear bar, we'll probably get at least a small second leg up. And then 67, another bull close. So probably by the close 68, by the close 69. And then 70, a really big bar. New high of the day. And we had a big sell-off here, big sell-off here. Probably going to go sideways soon. 70 is a really big bar. So it's climactic. We had a big breakout bar here and a small body for follow through, or smaller body on 67, and then bodies smaller right here, 68, 69, and then 70, another really big bull bar. And then it sold off on the next bar. So a lot of traders use 70 to take profits. Whenever you get a climactic bar at resistance, traders will often, if it's really obvious and climactic, traders will often take profits on that bar, and counter trend traders will sell aggressively. Probably buyers below 70 scaling in, but when you look at a bar like 71, it's strong enough that we'll probably get at least a small second leg down. So to me, there's probably sellers on any reversal up, and that will limit the upside at least for the next few bars. But the bulls, it was reasonable to buy the close of 70, so probably buyers somewhere below scaling in lower. The problem the bulls have is time of day. We could easily sell off quickly, and so for the bulls, if you bought the close of 70 and more below 70, if the next bar is a big bear bar, you certainly have to exit. And it's a small bar, 72. So we rallied, pulled back, probably going to go sideways. And then we got 3 consecutive bear bars, testing resistance, or testing support. 64 high, 65 high, probably going to go sideways in here. And then we pretty much rallied for the next few bars. So we had consecutive bull bars, 75, and I mentioned it was testing this area over here, and bears used it to sell. So the bears who sold the close on the way down to 73 expected a second leg down, and they didn't get a second leg down. So you will have bears who will look to sell a pullback, and they'll be so disappointed that they might just try and exit break even somewhere in here. And that's what happened on 76. 77, a second leg up. We rallied. 74, 75, it was strong enough for a second leg up. That's what happened on 77. So it's 2 legs up, and we have an obvious buy the close bar on 70. So bulls will buy the close of 70, scale in lower, maybe buy above the bull bar, betting that we will retest the 70 close. 78, a strong bull bar, closing above all the bars to the left, probably going to go higher. It's a reasonable buy the close bar, but to me, time of day, there's just no way I'm taking that trade. We could easily, in fact, I think it's more of a profit-taking bar than anything. The problem with buying it is the size of the bar alone is 5 points. And on 78, you've only got a few bars left in the day. So if you're buying the close and risking 5 points, what are you trying to make? And you can see we didn't even go up 5 points. So to me, I think it's hard to justify the math. For stop entries, reasonable buy above 1, buy above 2. You can buy above any of these bars closing on their highs. And if you're buying above 7, I think if the next bar is a big bear bar closing on its low, you can get out, or you can keep a stop somewhere down here. What about buying above 15? I don't know. I would not. I think there's odds favored a second leg down. But if you're buying above 15 and using a wide stop, scaling in is probably okay. And what about buying above 16, this bar? Probably okay, but with how climactic yesterday was and the buy climax is here, especially with this sell-off being as big as it was, there might be more sellers up here. And you can see bulls that bought the 16 close, they were so disappointed with 17, the bad follow through, that everybody started dumping their position and we sold off quickly. Probably buyers above 20, buyers above 22, even buyers above 24, but a little aggressive. We may get a small second leg down, but I do think we're going back up to here. Bulls buying above 27, and in here it gets really, really difficult. If you buy above 37, you're buying at the top of the trading range, and then you probably have to get out below 30. If you buy above 36, you're buying at the top of the trading range, and you have to get out below 37. If you sell below 37, you probably have to get out either as 39 starts to turn up or above 39. And then if you buy above 39, you really don't make all that much. And that really can be harmful. In a tight trading range, if you're buying above bars and selling below bars, you can really take on a lot of damage pretty quick. Reasonable to sell below 46, but it didn't trigger. Reasonable to sell below 49, a failed breakout of these highs, and it sold off and pulled back. One moment. Because of how much 50 pulled back, it is a warning that it's probably going to be a leg in a trading range. And what about buying above 54? You can, but I think that's pretty hard to do after 5 consecutive bear bars in a micro channel. And then, you can sell below 56, but again, not that simple. Pretty hard to sell when you see a strong rally like 54 and 55. And not really any good stop entries in here. And then probably okay to buy above 66. And if you do, you get out below any of these bars. So for always in, I think that's probably the best way most traders should trade. Always in, it's a buy above 2, buy above 3, and probably get out. Hard to say. Get out somewhere maybe at a point or two below 13. Some traders will see it as a buy the close rally, and they'll get out maybe 1 times a signal, the average bar. So maybe get out somewhere a few points below this measured move. Or maybe you could say 1.5 times the size of this bar. So some traders may get out here. And the reason for that is if bears can make money selling below bars in a buy the close rally, it's not a buy the close rally. It's probably a trading range. And not really that great of a sell. Big rally, big sell-off, probably sideways. Maybe sell to close 18. But if you're selling down here, usually, if you think about it, the bears had a sell-off on the open with the gap down. And they tried to sell above bars, getting a second leg down. And instead of getting, the bears wanted a bear flag. They wanted to sell off, pull back, second leg down below 1. And instead of getting that, we got a strong upside breakout. So it's a bull breakout above bear flag, which led to a measured move up. And this area will now become support. You had bears selling, hoping it was resistance. It broke strongly above, and it's starting to pull back. And you can see we're finding buyers at this price level. You can see even the bears that sold 3 high, this high 1, that later on in the day became support. So always in bulls buy above 20, and they can get out below any bar. For me, would I get out below 34? I think it's okay. Get out below 34 or above 35. Certainly get out of longs below 37. Aggressive bears will sell, but not really ideal. Tight channel, probably minor pullbacks. So in other words, probably sideways. And reasonable to, bulls might buy above 39 and then they sell again below 49, and the bears exit above 54, bulls buy. Bulls have to get out below 56. and aggressive bears sell, but if they do, they get out above certainly consecutive bull bars closing on their highs since the odds favor trading range, and bulls buy, they get out below probably 71. Hard to buy again here, and I'd let the rest of it go. Maybe they buy above 74, but still pretty difficult. Limit orders, all sorts of limit orders today. The easiest ones probably, there's really not all that many easy ones. You'll have some bulls just buying below bull bar, betting on a second leg. Other traders, they'll buy and just scaling all the way down, but that's pretty hard to do. Some bears, they sell the highs of big bear bars like 14, betting on a second leg, and probably buyers below 26, buyers below 32, 33, scaling in, sellers above 35 or 34 or even 32 for a second leg down, but not ideal, right at the moving average, and the moving average probably will be support. And probably, 1 second. And then bulls buying below bars, scaling in lower. That's pretty much it for the rest of the day. Buy the close, sell the close, reasonable to buy the close 2, buy the close 9, 7, 8, 9, 10, 11. What about buying the close at 12? You can, but, pretty dangerous. I'd get out maybe 3 or 4 points below any bull bar. Sell the close at 14 if you can scale in higher, but better to just sell higher. And then sell the close 18, sure, 19, probably okay, but if you sell the close at 19, it's not ideal. If you do sell it, you certainly get out as 20 is forming or on the close at 20. And 20 is probably by the close or 21 by the close, betting on a second leg up. And, here it's hard to buy the closes because if you think about it, these are tails above bars. Markets rallying and pulling back, rally, pull back, rally, pull back. So bulls are buying bear bars. They're buying the pullbacks, betting on higher prices. And is it by the close 55? It might be, but if you do, you probably get out below 56 and not really sell the close in here. Maybe 61, 62, but fairly difficult. And then probably by the close 67, 68, 69, betting that we get to a new high of the day, and I'd let the rest of it go. Let me review the rest of the questions. Okay, question. Can you please tell me how you noticed bar 35 was a high 1? So can you tell me how I noticed bar 35? Try to fix this box here. There we go. Can you please tell me how you noticed bar 35 was a high 1? So bar 35, high 1, before bar 36 started going above it? Yeah, I thought that bar 31 was a high 1, and, if it technically, yes, it would have to trigger for it to become a high 1, but I thought there were sellers above, so that's why I called it a high 1. And yeah, okay. So they're saying, how did I know? Well, so here's what they're asking. My thought was this. What they're saying is, I mentioned during this bar that if it reversed up, it would become a high 1 and bears might sell it. And they're saying, how did you know it was going to be a high 1 before it closed? And that's because whenever you have a buy to close rally and then you get a bar that's disappointing, like 34, it's the same thing as bar 14. It's a big enough bar that's disappointing. And when you get a big bar like 14 and you look to sell higher, typically when you get a big bar like 14, it's usually going to have a small second leg down, whether or not price goes above the high. So 34 I thought was big enough and enough of a disappointment bar that we would probably get at least a small second leg down. And when you get a high 1, it's common to get big bars like 34 and then bad stop entry buys on the next bar. It's like 15. 14 is a big bear bar, but then 15 is a bad stop entry buy. And when that happens, it is common for, let me just see one thing. So when that happens, it's common to find sellers above. So that's why I thought there'd be sellers above and a second leg down. All right, sorry about that. So question, hi Brad, did you learn the price action trading from just the video course or the books or both? I am just doing the video course. Yeah, I've talked quite a bit about that in some of the live streams on YouTube. I pretty much looked at everything that Al's done. I started with one of the books, then the video course, and really, I really studied all of it at the same time. The biggest help for me was studying Al in the trading room. I watched Al from probably 2013-ish to close to beyond 2017. So there was a good amount of years, I think a little more than that. I think that helped me probably more than anything is just getting to listen Al live in the room. And, give me just 1 second here. But it's a lot of work, and it just takes a lot of time studying. For me, I'll put it to you like this. If I can get this thing to work. So here is, I don't know if you guys can see this or not. This is basically, it's not all of them. I didn't get all of them saved, but this is pretty much every webinar. I've at least listened to a good portion of these, if not mostly all of it. But 2013, there's the date, and it goes all the way to 2020-ish. So there's 972, and I bring that up really just to explain the point. That's over the course of 2013 to 2020. So that is 7 years of webinars, just various webinars of Al's. And the biggest key for me was the webinar, listening to Al in the webinar just gave me a lot of confidence and trust in Al. And what it helped me to do is really believe what Al was saying and really trust in Al. And trust his logic was sound and what he was saying was honest and accurate. And other than that, I spent a lot of time just, watching videos, reading the books, and just really thinking. The biggest secret to all this really is you have to learn to think about the market and think through patterns and structures. No one can do that for you. Al can give you tools and resources, but he cannot teach you to think about the market. You have to learn how to do that. So for me, I would start with the video course and probably the trading room, and then I would start looking at books. Another thing I did that I found really helpful was I would take TradeStation and I would find the chart Al was talking about in the video course or the books, and I would try and pull it up on TradeStation and follow along. Okay, question at 12:37. They said, trying to make this a little easier to see. There we go. Question at 12:37. They said, quite a fight here. Where would you expect the first stop to sell off? Normally, I'll try and answer these questions during real time, but unfortunately, I just am running really low on energy. So where would I first? Yeah, so my thought was when 50 sold off, I thought we would try and get to yesterday's high. So they're asking, where did you expect the first stop of the sell-off? For me, traders scalped out. I thought there'd be a second leg down, and my hope was we would crash down to yesterday's high, but we found buyers below, and 50 was a warning for that. Question, how do you break even for bars 18 to 19? Yeah, you really don't. That's the unfortunate thing about today is bears that sold the close of 19 and scaled in, they, for lack of words, kind of got screwed. They did not, maybe they got out over here, but for me, if I sell the close of 19 and I see 20, I'm getting out because I know 20 is going to have a second leg. And it's the risk of the daily chart. If you sold the close of Thursday, if you sold the close of Wednesday to 26 and you see Thursday, huge bull bar, you got to get out. You can't hold through that. Question about, do I look at what charts do I use when I'm trading? I look at just one chart, and that is the day session, the 5-minute chart. But I'm aware of some things on the daily chart in various pieces. But for the most part, I'm just looking at the 5-minute. Brad, when do you expect a rally like the present move? Brad, when you expect a rally like the present move but are approaching the top of a trading range, what is more important? So let's find the time. 2:17 is, so they're asking this question in this context right here. And they're saying, Brad, when you expect a rally like this, but it's approaching the top of a trading range, which is here, which is more important? Do you scalp out at the high of the trading range or wait for a confirmed breakout? So do you scalp? So in other words, when you're long here and you see you're at the top of a trading range, do you scalp out at the top of a trading range and then wait for a confirmation of a breakout above the range before buying? Or do you hold the position? Do you hold with a better position on the move? So in other words, if you buy early, are you more willing to hold and take a chance that we break to the upside? Or if you buy early, do you scalp out and then wait for the breakout because the odds are it's going to fail at the top of the trading range? I think you can do both. The key is you have to be very, very quick to exit trades. An example is, it sounds crazy, but the example is 18 or 16. You buy this bar, but you're buying after a big sell-off. And if you buy the close of 16, stop below 16, or any of these highs, any of these lows, you're hoping, whenever you're buying at the top of a trading range, which this is buying at the top of the trading range, big sell-off, big rally, probably high in a trading range. Whenever you buy at the top of a trading range, you're hopeful that the market is going to break far and fast above the top of the trading range. Otherwise, you wouldn't take that buy. And if it hesitates, you get out. So for me, I think it's okay. You can stay long, and then, you stay long, maybe use the stop 2 times the size of an average bar to the downside, or maybe an average bar down. But then you get this bar like 78. And 78 is a little bit of it's a climactic bar. So it's going to bring in more profit taking on the bar. So you'll have more traders who, they see this bar getting vacuumed and stalling right at the highs. So a lot of traders exit. But to answer your question, a lot of traders, the longer they trade, I think it gets more traders. The longer you trade, the more you start scalping out and being quicker to just take profits and re-enter later. But I think it's okay to do both. The most important thing is you've got to have an exit plan. You can't buy the close here and get out all the way down here. So in other words, you can't buy the close of 55 and exit at the 54 low. That is just not going to work. And just imagine you get out below 54 during 62, you bought the 55 close only to watch it go back to the 55 close. The other problem with being long here is the bears got trapped here at 40, the bulls got trapped buying around 48. They got trapped buying on 55. They're probably going to get trapped again. Question, what do you expect next week based on this week's action? Yeah, next week will be really interesting. It'll be interesting to see what can the bulls get. This is a strong enough rally. I expect a second leg, but I suspect it'll probably stall. There's two things going to happen. I do think we're going to get to the February 2nd high. I do believe that. What I'm unsure of is, are we going to have a deep pullback somewhere down here, maybe 150, before we get to 42.50, which is February 2nd. So in other words, are we going to go straight up 50 points higher to February 2nd, or are we going to pull back to 41.50? Now, why am I saying pull back? Because I thought it was reasonable to sell the high of April the 26th. And those bears got trapped really quick, and they will use any pullback to buy back shorts. So it's possible that tomorrow, which is Monday, is another big bull bar, but I suspect it probably will not. Okay, this is, I guess, more of a comment, but they're saying thank you for the end of day live streams. They've been useful, especially when you go through all the nuances of what traders think about during price action patterns. Personally, it has helped me navigate around all the material on the website and to review the webinars. Yeah, I think my hope is I can help piece it together more. The reality is with trading, it just takes trading takes a lot of time and really just thinking and learning. And it's a little bit of you have to study, you have to spend time thinking about the market, learning the market. The first thing you have to do is you have to spend enough time learning the right information. And then the second piece is you have to spend a lot of time thinking about that information. So the first challenge is, what's a second leg? Take an example, a second leg trap. You've got to think about a second leg trap. Then, this will take it a little step further, you've got to think about surprise breakouts. The opposite of a surprise breakout is a trap. So a surprise leads to a second leg. The trap doesn't really lead to a second leg. We have a surprise breakout, 18 and 19. It did not lead to a surprise that led to reversal. So let's find a surprise breakout that led to lower prices. Here, this was a major surprise, led to a lot lower prices. Major surprise here, lower prices. But you can see, the other thing you have to think about is there's so many nuances, but the longer you think about trading, the easier it gets. You have a spike in a channel, you got a bear breakout below the channel, and it reset the market cycle. Breakout, channeling down, tried to form a trading range, but then it broke below the trading range and the market cycle started over and formed a channel again. So, and there's other things, but my hope is I can help with, my hope is I can help with making the information easier to learn. And, I fully believe Al's information is the best information out there as far as understanding how price action works, because you just have to know it. But the problem is it's a lot of information, and there's no way around that. Okay, question. This was at 254. So somewhere in here, bar 76. When there's a lot of tails, do you wait for consecutive bars, like 2 bars, then buy or sell? When there's a lot of tails, that means you're in a trading range. A tail is a failed breakout. So this tail, 43, 1205, it's a tail below. But if we go to 1205 here on a 1-minute chart, it's a sell-off and then a strong rally. So that creates a tail. So that is, in general, most traders should wait for consecutive bull bars. When the range is tight, it's better to just do nothing. And whenever you see a strong rally and a deep pullback, expect sideways. So, I know I'm not being helpful with the question, but in general, when there's a lot of tails and overlapping bars, I become pretty resistant to do anything unless I'm willing to fade with limit orders. I'm going to check the Discord one last time before I wrap up today's session. I'm trying to read it. So Stripe at 5 BTR20230428 Central Time said, "Hi Brad, can you make quick comments on my 5-minute RTH chart making I do it every day compared to the next day with you and Al's markings?" My mic might have been muted. I'll come back to that question. Looks like that is, I tell you what, I'll make this easier. For those still in the webinar, if I haven't answered a question that you want me to answer, just ask it somewhere, and I'll give it like 1 or 2 more minutes. And if there's no more questions that pop up, I'm just going to end the webinar, because it's really hard to go back. But I'll give it 1 or 2 minutes. And then I do have to wrap it up here in just a few. Okay, question, Brad. I noticed on the gap down days where price rallies on the open, when it successfully breaks out, there's often a rather violent retest of the breakout point. So I noticed that on gap down days, when price rallies on the open, when it successfully breaks out, there's often a rather violent retest of the breakout point. If you buy the close of bar 2, is it better to hold, expecting price to rebalance or scalp? Yeah, so if I buy the close at 2, I'm not exiting below 2. If anything, I'm buying more below 2. I actually just realized I have to be somewhere here in a few minutes. So say if there's any questions, comment in the chat, and maybe we can find a way to answer them through the weekend. But hope everyone has a great weekend, and I hope this was helpful. And everybody take care. Thanks.